A minute to go until the start of cash equity trading. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. Debate rages over the impact of China's common prosperity goals. A front page editorial in the People's Daily seeks to ease concerns. Ripping up the script, Boris Johnson appears set to head off a Tory rebellion over his £12 billion tax hike after breaking a key manifesto pledge. Plus, Bitcoin nurses losses. The largest cryptocurrency takes a beating as El Salvador fumbles its rollout as legal tender.
Meanwhile, Tom, European equity market futures point to the downside, and in fact, increasingly so as we've been going through the last hour of the programme here on the European Market Open. We have seen a bit of a deterioration in expectations for the start of the European trading day, in particular here in London. The FTSE 100 futures down by 0.5%. Will that be to do with the mining sector? We saw Barclays downgrading that sector, but they were moving around a lot of other sectors as well. So we'll see whether that has any cut through at the start of the European trading day. Take us through the market open then, Tom.
So we're looking at the FTSE 100, as you were suggesting with the futures. Maybe that Barclays downgrade is playing into this as well. Down 0.2% just in the first few seconds or so. The Asian trading station, by the way, that was lower. The standout, of course, was Japan on some better GDP data. But other than that, across the Asian markets, you were lower. The US, of course, S&P 500 closing in the red, but the Nasdaq reaching another record high. That divergence and calls there sounding concerns from the likes of Morgan Stanley, but also Bank of America about the future outlook for US equities and the growth picture there. The Spanish IBEX is down heavier than the FTSE 100, down 0.7%, losing 64 points just in the first few seconds. Over in France, the CAC 40 is lower by 0.4%, 39 points, I should say, 0.6%. Looking ahead, of course, to that ECB meeting tomorrow and whether or not Christine Lagarde and the team there push ahead with a reduction in PEPP asset purchases, 80 billion euros as things stand. The pace and the trajectory of those asset purchases in focus for investors here in Europe.
Yeah, the banking sector looks to be taking an early leg down at the start of trade. EQT in particular, in the private equity space, that stock down by 7%. We'll return to the sector breakdown a little bit later. European equity markets then do seem to be dropping a little at the start of the trading session here today. Let's think about where we head, though, on some broader fiscal narratives. Here in the UK, Prime Minister Boris Johnson says that a new tax levy is needed to help fund the country's National Health Service and reform social care, despite breaking a key election pledge in the process.
No Conservative government wants to raise taxes, but nor could we in good conscience meet the cost of this plan simply by borrowing the money and imposing the burden on future generations. So I'll be absolutely frank with you, this new levy will break our manifesto commitment, but a global pandemic wasn't in our manifesto either.
Let's get an analysis of debt markets, government debt markets. Pooja Kumra, Toronto Dominion Bank Senior European Rate Strategist, joins us now. Pooja, very good morning to you. Let's focus our conversation first in the UK, but also think about what it tells us globally about fiscal spending and about tackling deficits, because it does seem as if the UK maybe is leading the charge on taking fiscal deficits post-pandemic more seriously, putting up taxes as a result. Is this something that the bond markets were calling for, gilt markets were calling for?
Good morning to all of you. Yes, I think in terms of if we compare the stance from Europe, UK, as well as US, we have seen Rishi Sunak does want to follow a conservative fiscal strategy, and that's what was revealed even in the March budget that we got. And that's when our focus will be on the next budget that gets released in October 2027. I think given UK's path of recovery and the rate of vaccination, I think UK can actually start looking at going back to fiscal tightening. And this is something that conservatives have always manifested. But I think that's not the case everywhere. In US, we still know that there's an over $5 billion deal that Biden could bring to us in the coming years. And in Euro, even though we get the fiscal deal, the European Recovery Fund will start to pick up in the coming months as well with respect to its fiscal spending. So I think at this stage, I know most governments will like to be a little more into the fiscal spending, just given the fact that we are just not out of the woods from the COVID damage to the economy. And even right now, most of the countries are dependent on the government-led schemes, whether it's the European German schemes or whether it's the schemes by the furlough. We don't even know what will be the future for UK's furlough. So I think they are just trying to set the path towards a conservative fiscal system. But I think mostly the strings will remain loose in 2022, and that's where also when we expect most central banks to remain supportive when it comes to economy.
Okay, how does that all percolate through the gilt market then? About 0.74 points on the 10-year gilt currently. Do you see the front end pinned lower for the longer term? Do you see upward trajectory at the longer end of the curve here in the UK?
So in terms of UK, right now, all the curves are basically have a very strong beta to what is the move in treasuries. So I think as long as Fed keeps everything well anchored, it's good for both bonds as well as gilts. In terms of a conservative fiscal strategy, it will definitely be taken well by the gilts market, and we could see it trading with an edge with the UST markets as well. But I think when it comes to the central bank policy, I think MPC has given us a clear idea that they are fine with some form of tightening to come early next year. So markets are actually pricing around a 15 basis points hike by mid-2022. And I think that's what is the suggestion that we have got from MPC members, that they will be tightening slowly, but the pace will be slower. And what we need right now is markets are going to be extremely data dependent, just given the fact that still now the incoming data is extremely transitory. We see so many ups and downs, and it's hard to actually get any color from what is the real economy about. And I think MPC is also trying to wait for how the end of the furlough scheme impacts the economy. Note that there are still 1.9 billion million workers who were still on this scheme by end June. So I think they are really keeping an eye on how the economy transitions post end September.
Okay, but if these bond markets are taking their lead from treasuries then, Pooja, how much momentum do you see to the recent rally in bond yields? So the path today looks a little different. We've actually got bond yields dropping just a bit. So we're down at 1.349 is where we trade on the US 10-year. We went up to 1.37, I think, yesterday. Do you think that we see further upside for yields from here?
I think we could see some upside over here, just given the fact that September seasonals are towards higher yields. We do see a very heavy corporate issuance calendars, and markets come back from August. So there's more liquidity. So I would expect some move higher towards rates, and especially given the fact that whether it's ECB tomorrow or whether Fed in the coming months, they are addressing an end towards QE. So that's something that will put a weight on how treasuries are yielding, how bonds will yield, as well as how gilts will yield. But I think what is clear from most central banks right now, and also the message that we got from Jay Powell at the Jackson Hole, that they are trying to separate the link between tapering as well and the first rate hike. So even though they are starting to reduce their asset purchases, they are still trying to keep the front end well anchored. I think that's key for markets. As long as that they're able to do so, I think the entire bearish impact of central banks' policy is limited. markets are definitely not very optimistic about long-term growth, and that's why treasuries are yielding at the lower range as compared to what we saw in the beginning of the year. So I don't see the highs that we saw there. We are still looking for a gradual increase in global yields, but to a slow pace, just given the fact that we expect central banks to keep things well anchored.
Okay, gradual upside possibly for US yields then, and of course we're looking ahead to the ECB, more clarity hoping to come through from Frankfurt tomorrow. Pooja Kumra, thank you for your insights from Toronto Dominion Bank, Senior European Rates Strategist. Okay, coming up, taper talks. The ECB Governing Council, as we noted, meets tomorrow and could discuss its transition from emergency stimulus. That's as euro area inflation sits at its highest level in a decade. We'll discuss that next with a very special guest. This is Bloomberg.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Welcome back to the Open. 11 minutes into the European trading day, red across the board. The benchmark stock 600 is lower by a full percent. European equities closed in the red yesterday. Concerns for some investors, at least, about the trajectory of the taper from the ECB. We're going to get more clarity, of course, from Madame Lagarde at that meeting tomorrow. And the ECB Governing Council is meeting tomorrow, of course, to discuss the possibility of reducing the asset purchase program that's been in place since the start of the pandemic. Some policymakers suggest the central bank should start discussing the transition from emergency stimulus to help meet its inflation goal. Consumer prices in the Eurozone rose an annual 3% in August. That's the most in a decade, and above the 2% ECB target. We are very pleased to be joined now by Jean-Claude Trichet, former president of the ECB, of course. Jean-Claude, thank you for joining us this morning. I hope your week is going well. Is now the appropriate moment for the ECB to start reducing those bond purchases?
First of all, thank you for inviting me. To respond to your question, I would say we are in a different universe, it seems to me, in the US and in Europe. In the US, you had a commitment to purchase exactly the same amount every month, and this is a clear-cut commitment. So tapering means something. In Europe, there is flexibility. The central bank always reserves the right to accelerate or weaken the pace of the purchase of tradable securities, according to the pandemic program. So we will see. They have, in the past, modified their pace of purchases. I don't exclude everything, including the fact that perhaps they could say now, after a period of time where we accelerated our purchases, we can now go back to the previous level or even diminish a little bit. I don't exclude anything. But again, it's not a big deal. It is the way the ECB Governing Council is handling the purchase of tradable securities according to the pandemic program.
It's not a big deal, you say, Jean-Claude. Good morning to you. You say the ECB has the flexibility. Should they then, do you think, should they be reducing the pace of those purchases at this time?
Well, again, as always, you have no pros and cons for any kind of measure. In the past, because they were afraid of the impact of the health situation, they, as I said, decided to accelerate the purchases. We will see what they do. They could pretty well go back to the previous level of purchases, or again, consider that the situation is still uncertain in terms of COVID-19, that the pandemic is still there. But what is rejoicing, whatever decision they take, what is rejoicing is to see that the European economy is going faster than was anticipated. At least Eurostat is telling us that as regards the second quarter of this month. And I am looking very carefully to the PMI, you know, the purchase, so-called purchase director index. And clearly we see there an acceleration in July and August in comparison with the US. For the first time since a very long period of time, we have a better PMI in Europe than in the US in August, for instance, which is more or less reflecting the fact that the situation as regards the pandemic is worse in the US now than in Europe, that the Europeans are more vaccinated than it is the case in the US. So you have a rebalancing on both sides of the Atlantic of the health situation, which proves, by the way, that you can never consider that you are out of the wood.
I mean, absolutely. And of course, that's playing out in terms of the economic divergence as well. The economy and that demand, plus the supply chain, is playing into inflation. Are inflation expectations now starting to become more ingrained? Are you seeing evidence that the inflation situation, the data out of Europe, that is becoming more entrenched rather than transitory?
Well, again, I compare the US and Europe. If you compare US and Europe on inflation, you have in Europe 3% CPI, but you have core inflation at the level of 1.6% in the last reading of the situation. In comparison with the US, the core inflation in the US is around 4.5 or something. So 1.6 on this side of the Atlantic, 4.5 on the other side of the Atlantic. So we cannot compare the two. I personally regret a little bit that in the revision of the overall strategy of the ECB, they did not stress more the fact that core inflation is really very important, and the reading of core inflation is very important in terms of anchoring solidly longer-term inflation expectations. So as you see, in my own judgment, 1.6% core inflation, when you put outside, of course, the incredible jump in the prices of energy and some other prices, when you put that aside, you do not have something which looks very alarming in terms of long-term inflation. But of course, you have to remain always vigilant, that's clear. But again, to assimilate what happens in the US and what happens in Europe doesn't seem to me appropriate. Again, in Europe, we are not yet, in terms of core inflation, at a level which would be alarming in my own reading.
Okay, so that sounds then, Jean-Claude, that you would not be lining up with Holtzman and Weidmann at the ECB And, you know, if you were in charge of the ECB still wagging your finger and saying that strong vigilance is required, it sounds as if you would not be doing that if you were still in that position.
Well, again, first, I'm not in that position. Second, I always trusted that the consensus after, you know, due and appropriate exchange of views inside the Governing Council is absolutely essential. And we need to, I would say, have the appropriate dialogue between all vision that exists in the Governing Council. They have also information that I don't have on, again, the perspective of the longer-term inflation. They will display the staff projections, the projections of the ECB itself in terms of both growth and inflation over the period to come, this year and the next years. So these are very, very important information that the members of the Governing Council have and that we don't have yet. And I trust that this is, of course, very important to work out the appropriate, delicate, balanced way to deal with the present situation. But again, first of all, we are not in a situation where we would be like in the US with a dramatic decision to take, in my opinion, because they are flexible by construction. Second, there is no point in considering that it is time to work out the appropriate way of getting out of the pandemic program, which is supposed to terminate at the end of March next year. So we are in a situation which should not be dramatized, in my opinion, but it is very important, of course, that the Governing Council has some kind of appropriate view on whether or not what happens is transitory or not. But it is up to, I would say, the Governing Council on the basis, again, of the work which is not yet published and will be known tomorrow, that they will take their decision.
Okay, thanks very much, Jean-Claude. Really good to speak to you. Jean-Claude Trichet, former president, of course, of the ECB. Coming up on this program, Ford poaches a key executive from Apple. What does it mean for the iPhone maker's auto ambitions? We'll discuss next. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for, you know, everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
Welcome back to the European Market Open. 22 minutes into our European trading session, European equity markets deteriorating a little bit this morning and now down by more than 1%, as you see on Stocks Europe 600. Is it the Delta variant? Are we really concerned about that? That was one of the dominant themes in Asia, but Europe's in a different place on that particular narrative, so difficult to link that up. US futures have certainly been deteriorating the last half hour, now down by 3 to 0.5% on US equity market futures. Let's move on to some of the stocks that we've been watching and therefore some of the stocks on the move this morning. Smiths Group is one of those. This stock certainly on the rise this morning, up, as you can see here, by more than 3%, nearly 4%. They've agreed to the sale of their medical unit to ICU. They agreed to sell that business, even though, as we were hearing from our colleague Sam Unstead earlier on, they'd had a previous deal lined up. This looked to be better, and they preferred this one. Tom, EQT, a bit of a weight on the markets today.
It is. This is after a share sale that was brought forward for some of the founders of what is Europe's largest listed private equity firm. So $2.7 billion, essentially in krona, but in US dollars, in terms of the sales there by partners in this private equity company. The share's lower by 6% currently.
A better story over at the luxury goods company Salvatore Ferragamo. We've got earnings beating estimates for the first half there, and shares on the rise, up by 4.5%. The strong read of the strong numbers here, according to some analysts, could set the stage for better performance from some of the luxury goods companies in the US later. So do keep an eye on that. Now, to a Bloomberg Scoop. Ford has snatched the head of Apple's car project. Doug Field joins the 118-year-old car maker as Chief Advanced Technology and Embedded Systems Officer. Joining us now for more is our autos reporter, Elizabeth Behrman in Munich. Fascinating story then this. Elizabeth, good morning. So Ford CEO Jim Farley called the hire of Doug Field from Apple a watershed moment for the company. What is behind the excitement in the auto space?
Yes, Ford here is getting very, very strong Silicon Valley talent who at the same time has this incredibly strong engineering pedigree. Before he was obviously the head of Apple's car project, he was a top engineer for Tesla, and he was very important in launching the Model 3 for Tesla. For Ford, this is a real coup. He'll be involved in car connectivity, which alongside electrification and autonomous driving is going to be really, really important for car makers to help deliver this recurring revenue that they're all striving for. So you're no longer just buying a car once, but you're continually delivering more services to drivers they're happy to pay for.
What are the prospects then for Apple's car project?
Yeah, that's a great question, and I don't have a definitive answer. If you look back on the many iterations of Apple's project, obviously always very much shrouded in secrecy. At the beginning, back in 2014, the news was that they were going for developing their own car. Then it switched to a project that was focused on an autonomous system. And now, since last year and at the start of this year, we had a lot of speculation that Apple was going to be building a car with another manufacturer. They were in talks, that we know, with Hyundai, Honda, but those talks fizzled. And since then, a number of key managers have left Apple's car project.
Okay, Elizabeth, thank you very much. In terms of that personnel change, Ford poaching a senior executive from Apple. That means for the tech company as well. Okay, coming up, we're going to speak to the Director General of the Spanish Treasury as the nation became the latest turning to the hot market for green debt. That conversation is coming up next. We'll also, of course, bring you an update on the market action as European stocks slide more than 1%. This is Bloomberg.
China has been focused for a long time now on catching up to the United States in space when it comes to space exploration, and they've really made a couple of really impressive achievements. For instance, in May, China landed a rover on the surface of Mars. It's only the second country after the United States to manage to do that. In June, China sent astronauts to its space station, which is still under construction. China is not part of the International Space Station because the United States worked to exclude China from that. But instead, the Chinese are working on their own. That's scheduled to be in full operation, I think, next year. The Chinese have really come a long way in space. That said, all of that's run by the Chinese government. There is a role for Chinese companies to play in the space program. They're not being as front and center, say, as Elon Musk with SpaceX or Jeff Bezos with Blue Origin. China's companies are playing a more supportive role, I think it would be a fair way to say it, working on things like satellites, rocket launch operations. They're leaving the really big, sexier items when it comes to space exploration, leaving those to the Chinese government.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 30 minutes into your European trading day, here are your top stories. Debate rages over the impact of China's common prosperity goals. A front-page editorial in the People's Daily seeks to ease concerns. Ripping up the script, Boris Johnson appears set to head off a Tory rebellion over his £12 billion tax hike after breaking a key manifesto pledge. Plus, Bitcoin nurses losses. The largest cryptocurrency takes a beating as El Salvador fumbles its rollout as legal tender. So, Tom, a lot of movement actually on European equity markets today, picking up on some of the softness we saw in the US yesterday away from big tech, and some of the softness we've seen in the Asia session as well. Concerns around the Delta variant maybe was the dominant theme in Asia, but that doesn't really translate to Europe in quite the same way. So it's really interesting to see just how much pressure the European equity markets are under this morning.
Yeah, absolutely. To what extent is this just profit-taking? To what extent is this more ingrained risk now as we look ahead to the ECB? And some important calls. You mentioned the US, of course, some important calls out from Morgan Stanley. Andrew Sheets and the team there downgrading to underweight US equities because of concerns about risk around policy, risk about fiscal stance, but also Delta, of course, the growth trajectory there in the US and focus for that team. Bank of America saying the Goldilocks period is over. We were talking to Jean-Claude Trichet, of course, just in the last few minutes. He's not overly concerned, it seems, about inflation in this part of the world, saying that there needs to be flexibility from the ECB. Here is the picture as things stand about 30 minutes into the trading session here in Europe. As Anna was saying, sharply lower, down by more than 1% across the benchmark. The FTSE 100 is down by 0.8%. The DAX is in worse shape, down 200 points now in the first 30 minutes. The CAC 40 is also lower by more than 1%. Let's turn it on to the sectors and look at how things are shaping up then. It is red across the screen. Every single sector is lower this morning. Again, the focus on the action from the ECB, what we're going to be hearing from Christine Lagarde, as Anna was saying, is the Delta variant as well rearing its head in terms of the risks and the trajectory for growth. Bank of America saying, at least in the US, you're looking at the end of this period of low rates, low yields, and high growth. That is starting to change, at least for them. So the leisure sector is down 0.4%, but in worse shape, you've got autos and parts down more than 1.6% as things stand. Anna.
Tom, let's talk about the ESG markets and the business of raising debt in an environmentally conscious way, shall we? Spain is the latest European nation turning to a hot market for green debt as it seeks to fund projects that halt climate change. With natural disasters from wildfires to floods pushing climate up the agenda globally, countries around the world are piling into the market to finance a greener recovery from the pandemic. Spain raised €5 billion from the sale of a bond, pulling in more than €60 billion of demand. Joining us now, Maria Tadeo, who has a guest who can review this topic for us. Maria.
Yes, Anna, good morning. And that sale was very, very oversubscribed yesterday, as you alluded to, 12 times oversubscribed in terms of the demand for that Spanish inaugural green bond. And to debrief, we're joined by the Director General of the Spanish Treasury, Pablo de Ramón Laca, who's joining us from Madrid. And Pablo, when you look at the sale that you had yesterday, in terms of the numbers, you attracted a lot of attention from investors, but you issued $5 billion. Why didn't you go bigger, given there was so much interest?
Because we didn't need to issue more, Maria. We're very well funded so far for the year, and we didn't need this first tranche of our inaugural green bond to be any bigger in order to ensure that the launch of the program was very successful. We're very clear from the very beginning, even before the summer, that 5 billion was the target size for this 20-year transaction. It is a liquid reference, and we obtained a greenium. This means that by virtue of being green, this bond saves taxpayers money because it was issued at a slightly lower yield than if we had issued a conventional bond.
Exactly. And that point, I want to pick up on that. Were you happy with the price point?
Yes, we were. We priced flat against fair value, which ensured that there was this greenium, which saved money for the taxpayers, as I said. As we tap this bond through auction, this greenium is bound to become structural. Everything else equal, investors are willing to pay more for a green bond than for a conventional bond.
Right, so you see that becoming more structural. And you mentioned investors, so I'm curious, who bought into this bond that you issued yesterday?
We reached a lot of new investors, which was yesterday, which was very good news, and it was one of our objectives. The level of oversubscription allowed us to be very selective, not just with respect to the high-quality projects to which this first tranche is associated, but also with respect to allocation. So we were able to place 2/3 of this bond with so-called green investors, which are investors with specific green mandates. This specific investor base is typically real money, buy to hold, focused on the long term. So understandably, they care a lot about the climate change and the ecological transition. So specifically for this transaction, 47% went to pension and insurance, which are very long-term investors. Almost 20% went to fund managers. Almost 10% went to central banks. And by geography, there was a lot of interest by Nordic investors, which is more than Spain usually commands. So we think that we have successfully diversified our investor base.
Right, and it's interesting you mentioned that because a lot of the talk in the market was that this was going straight to the ECB's balance sheet. Based on what you say there, it's actually not. There was a lot of appetite from the pension funds and real money out there. And I'm curious to know, every week, we talk about on Bloomberg TV how there's all of this hot money going into green investment. There's new issuance all the time. Do you fear, however, that this market is becoming a little bit overcrowded?
On the contrary, the more issues out there, sovereign, supranational, corporate agency, the more liquid this market is, and the easier it is to issue into it. So take, for example, Next Generation EU green bonds. They will fund up to 28 billion of green projects within Spain's budget. So green bonds and Spain's EU green bonds and Spanish green bonds are natural complements. So we think this market is becoming more mature, more liquid, and this is why we were able to achieve this greenium.
And, so you don't see competition feeding into that, but I do wonder, in terms of the Spanish Treasury for the whole remaining year, when you look at the whole issuance for the country, I believe you're 80% already financed in terms of your program for the year. Do you see any need to issue more? Are you going to keep track on the plan that you already announced, or is there anything new in the pipeline?
Well, as you say, we're 80% funded in the year, so we're in a very comfortable position in terms of issuance. Now it's time to deliver on the plan that we have designed for Spanish growth. We have to implement the reforms, enact the reforms. We have to execute the investment, and we have to grow strongly and sustainably. Spain has the will to grow, the means to grow. and we have a very clear and detailed roadmap to do so.
And just a final question, would you say the investor focus from now on, given that you have a plan, you have the money, you're overfinanced, will be on the implementation, especially of European money? Is that what you hear from investors? They want to see the implementation?
Yes, they'll be looking very closely at how not just Spain, but every country implements this. This is a once-in-a-lifetime opportunity to change the way Spain grows. And this is the way we are going to reduce debt to GDP by fostering long-term, structural, sustainable growth. And this applies to all EU countries as well.
Well, Pablo de Ramón Laca, Director General of the Spanish Treasury, congratulations for that sale yesterday, and we hope to see you very soon, as always, on Bloomberg TV. Anna?
Okay, Maria, I'll pick it up from there. Thank you very much indeed. Maria Tadeo there, joined by Pablo de Ramón Laca, Spanish Treasury Director General. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. Boris Johnson's government will hold a House of Commons vote on its new tax package today. The UK's Prime Minister appeared to see off a Conservative Party rebellion over the tax hike after announcing that pensioners and shareholders would also pay more. The increases are expected to generate £36 billion over the next 3 years to fund the COVID-hit National Health Service and social care for older people. The White House says 3/4 of US adults have now received at least one dose of a COVID-19 vaccine as President Biden prepares to outline a new strategy to fight the pandemic. Biden will unveil the plan on Thursday, with vaccine hesitancy slowing the country's inoculation efforts and cases hitting a new record last month. Egypt's Minister for International Cooperation has described expectations for the country's growth rate as impressive. Rania Al-Nashat spoke to Bloomberg at the start of the Egypt International Cooperation Forum conference in Cairo.
Our growth rate has been one of the positive ones globally. Expectations are quite impressive going forward, and that comes on the back of very important reforms as well as projects across different sectors that have not stopped despite the pandemic.
Credit Suisse has named Rafael Lopez Lorenzo as Chief Compliance Officer, filing the last gap left by the exit of Lara Warner after the Greensill and Archegos scandals. Lopez Lorenzo, who's currently head of Group Internal Audit, will take over next month as the bank works to rebuild its management ranks. Christian Graef is appointed as head of Human Resources. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Laura, thanks very much. Laura Wright in London. Now, coming up on the programme, regulatory clampdowns and common prosperity. President Xi Jinping's push for balanced growth in China has sparked an international debate. It's also sparked some debate about just how drastic, just how radical the plan is going to be within China. More on that next. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
The power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
One way or another, we have to move more to an environment of equal opportunity, hopefully to produce greater productivity through equal opportunity, but also to reduce that wealth gap. That's opportunity gap and wealth gap thing, and that redistribution is in the swing, and that will happen.
Bridgewater founder Ray Dalio there on Beijing's regulatory clampdowns and President Xi Jinping's push for common prosperity. Meanwhile, China's government is trying to ease concerns that the crackdown will hurt foreign investors. A front-page editorial in the ruling Communist Party's newspaper, The People's Daily, stated that supporting the development of the non-public sector of the economy has not changed. Bloomberg's chief Asia economics correspondent Enda Curran joins us now from Hong Kong. The significance then, Enda, for you from this People's Daily editorial, the mouthpiece of the Communist Party.
I mean, obviously on the front page, Tom, again, as you know well, that's a very powerful message in itself. It is sending a very deliberate signal from the top that, look, China is still somewhat open for business here. It is welcoming foreign investment. And of course, the role for private business in the private sector will continue. I think, though, the issue with that will be, while of course it's clearly coming from the top, it's also a message that global investors will say that they've heard many times before. And I think it's coming at a time when the outside audience, the world of global investors and global companies who want to do business with China, are probably looking from the outside in saying, trying to get clarity in terms of what is going on now with this massive policy agenda. So I think it will be met by, it will be taken at face value. Yes, it's an important message, but it will also be greeted with some degree of skepticism.
Yes, I mean, does it go any way to allay international investors' concerns then, do we think, Enda? Or do you think your latter point wins out there? Because there are some who just question just how far, just how sweeping this campaign of new regulations is going to be from the Chinese government. And if the debate is taking place even within China about what the end goal is here, about how substantial the changes are going to be, you wonder how the international community manages to find its feet.
Well, exactly, and like you mentioned, it seems as though there's a lack of clarity or even a degree of confusion in China itself, and this is being played out in the state media, like you say. On the one hand, we've had some commentary making the point that we're heading for a profound revolution in China. That's been pushed back from some other quarters, including the Global Times, this nationalist tabloid, saying, hang on, this is going to be more gradual social change. So global investors are trying to pick up the pieces and read into what all of that means. What we do know, at the very least, is that China is trying to pursue two very ambitious agendas here at the same time. On the one hand, they're talking about pursuing greater equality for society and making sure that families get a lift up. And on the other hand, they're promising to pursue, greater innovation and pursuing the kind of risk-taking and private sector-led economy that one would assume China needs to meet its economic potential. And I think that's where investors globally are saying, how, at the very least, that will be a challenge to meet both of those targets. And I think they're looking for clarity in terms of how exactly China plans to do so.
Enda, thank you very much. Thanks for joining us. Bloomberg's chief Asia economics correspondent Enda Curran with the latest on China and the regulatory push we're seeing there and the many fronts it takes on. Let's go to Bloomberg Business Flash. The top corporate stories we're covering. Here's Laura.
Thanks, Anna. El Salvador's experiment using Bitcoin as legal tender had a rocky start as the coin's price crashed on its first day. The cryptocurrency plunged as much as 17% to its lowest level in a month amid news that the government disconnected its Bitcoin wallet to fix glitches. Later in the day, the president tweeted the problems had been fixed. A new report says a growing number of employees say they feel isolated from colleagues, highlighting the downsides of working from home. The research from Deutsche Bank also flags the risk of problems from inadequate remote work setups. Even so, a separate survey by the bank showed most people expect to keep working from home 2 to 3 days a week, even when the virus subsides. Neptune Energy is said to be considering a merger with rival Harbour Energy. Sources tell us a deal could value the group at $10 billion or more, creating one of Europe's biggest independent oil and gas companies. The pair's assets span the UK's North Sea, Africa and Southeast Asia. We're told Neptune is also considering an IPO or an outright sale. Toyota is planning to spend $13.7 billion on the supply and development of batteries by 2030. Earlier this year, the world's #1 car maker announced plans to introduce 15 EVs globally by 2025. It's also sticking to its vision for non-EV cars, such as hybrids, which it says will continue to play a role in global auto markets in the coming decades. That's the Bloomberg Business Flash. Tom, Anna.
Laura, thank you very much indeed. OK, coming up, plenty of eyebrows are being raised after steepening in the Treasury curve following Friday's jobs report. Yields now, by the way, edging lower. We're going to hear more about what MLive's Ven Ram calls the prima donna in the markets. That's next. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We will offer for our customers and fans for the next years in each of our Porsche segments, a combustion engine, a hybrid engine, and a whole electric engine.
2022 will be the last year of a firework of combustion engines only. And then in 23 and 24, we are going to hybridize all our lineup.
In that gigantic market, there is a niche, which is the super high performance cars, and the Motor Valley is a clear example.
It's not only about Europe, so we have to be prepared to be compliant worldwide. So it's useless to have let's say, an exemption and everybody's doing thumbs down.
We need time to
get electric, because we need the capacities, the plants for the battery cells, and that will take time.
Now electromobility is really keeping up the pace, and we are right in the middle of it.
We are accelerating our path towards full electrification, and in fact, we're really going to go for it and see if we can convert our whole portfolio to fully electric by the end of this decade.
It makes me very optimistic. I mean, to see the push that is happening now, very cool. Even from, I like to call them like dinosaurs, these really old German traditional companies who are really going through this disruption now and almost getting this startup feel to them.
Automakers, dinosaurs and disruptors. Speaking to Matt Miller at the Munich Auto Show, talking about the push towards electric, some of the supercar makers in there as well. Now, we are 53 minutes into our European trading session, and things looking pretty risk-off for European equity markets. Let's get to Ven Ram from our Markets Live team, who can give us his insight. So equities selling off, generally a pretty risk-off mood then here in Europe this morning. Ven, good morning to you. What's driving this risk-off vibe, do you think, from this European perspective? Because a lot of the copy I've read this morning suggests that, there's ongoing concerns about the Delta variant. I wonder if that really has legs in Europe, though. Is this more to do with bond yields and that read across? What's happening?
Morning, Anna. I would definitely say that the increase in Treasury yields that we've got since Friday's non-farm payrolls report is rubbing off on the rest of the markets, which is not surprising given, everything, just about every asset that is priced in the world takes its cue from 10-year Treasury yields. Looking at Treasuries themselves, I think that, we are seeing that Treasuries are trying to rally this morning. So it kind of tells us that, look, I mean, we are not in a long-term bearish situation when it comes to Treasuries, at least for the moment. While we could get a measured 20-25 basis point increase from current levels, that's about as much as we could get. What we need for a sustained increase in yields are higher real rates and a higher terminal rates. Real rates in the U.S. are still deeply negative, which is kind of disturbing given where we are in terms of growth expectations both for this year and next year. So given all that, the likelihood for runaway rates from here is rather slim.
And switching focus to the ECB and the yield story and how that's playing out here, you've seen, of course, European yields, the Bund, of course, the German Bund, edging higher in the last few days and weeks. Do you expect that to continue? What is the message you're expecting to hear from Christine Lagarde?
You're right, Tom. I mean, we've kind of sold off like 18 basis points on Bund since the middle of August. But the key thing, too, I've been flagging for a long while that as we come out of the summer, the rich valuations in bonds are likely to be questioned, and that's exactly what's going on. As for the ECB, they've got, there is no incentive for them to move away from their dovish stance just yet. They've used up some 1.3 trillion of their 1.85 trillion envelope for PEP purchases through the end of August. In other words, they still have more than 500 billion euros left to be used up. In fact, there's a good chance that the ECB may not use up the full amount if the market backdrop remains favorable. Net-net, I think they are going to be dovish and err on the side of caution, if anything.
Okay, yeah, keeping that powder dry, at least some of it. Ven Ram from our Markets Live team, thank you very much indeed. Looking ahead to the ECB meeting tomorrow. Red across the board in Europe, some bloodletting in European equities, looking to US futures down by 0.4%, something of a sour mood filtering through these markets. That is it for the European market open. Surveillance, early edition is up next. This is Bloomberg.
after 15, 16 years in power, actually, remains one of the most popular, if not the most popular German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever, are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Somebody said, I want to be the next Reid Hoffman. What would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
El Salvador, let's face it, it's on its back. They're grasping at straws with Bitcoin.
We don't really focus on the price, so it's not something we can comment on. It's really that the important piece that we care about is how many developers are getting into the ecosystem, how fast are they building their products.
There's a realization that this is a technology, and no investor wants to miss the next internet. This is the next internet.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Wednesday, the 8th of September. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Selling the fact legitimacy is Bitcoin's worst enemy, with the digital currency sliding as much as 17% after El Salvador makes its legal tender. Mike Novogratz tells Bloomberg he's still a bull. Too good to ignore, well, Ray Dalio says that opportunities in China and Singapore cannot be neglected as debate rages in the Chinese media over the meaning of common prosperity. And the great green mirage. Well, Bloomberg analysis finds that a quarter of U.S. sustainable credit lines since 2017 contain financial incentives that are largely meaningless. We'll discuss that with Chuka Muna, JP Morgan's head of EMEA ESG. Now, first thing is first, as always, let's look at the markets. I woke up this morning and read a nice note by our Mark Cudmore from the MLive team that says, look, the problem with the market right now is that there's a lot of debate on exactly what we're seeing because of extra concerns about the Delta variant. And so you see half of investors saying, look, there's going to be some kind of market correction. The other half saying we're going to go ever higher. The European stocks taking a little bit of a breath of fresh air. You can see down some 1.1%. The focus, once again, is on China, the crackdown, what common prosperity means for some of the things that we're looking at, including industries, not only like tech, but also, for example, gaming. We're seeing a bit of downside also for the S&P futures, down from 0.3%. And look at oil, always a good idea when you look at economic forecasts. Europe, if you look at the UK, so a lot of financial and, of course, some of the big companies in the European map. I think we have it so that we look individually at the FTSE and what's happening in the CAC 40. I don't know if we can bring it up. Otherwise, I know a little bit of what's going on. You can see extra pressure, of course, on the CAC 40 and the DAX. Retail rich, very close to what's happening in the real economy. The UK, a bit financially heavy, was oversold yesterday. The UK story is also about extra taxation, and then Bitcoin has been, frankly, all over the place, certainly since yesterday. We were also speaking to Mark Mobius about that. Now, Bitcoin nursing losses after plunging amid El Salvador's troubled rollout of the largest cryptocurrency as legal tender. Now, the country's experiment with Bitcoin is seen by investors as the biggest test of the token's real-world usefulness. But despite Tuesday's sell-off, billionaire Mike Novogratz remains bullish on crypto.
It got long for good reasons, right? I think in the last 8 weeks, there has been a giant realization that crypto is not just Bitcoin being bought as a hedge against bad monetary and fiscal policy, but maybe more importantly, it's Web 3.0. It's the Internet of Value Transfer. There's a realization that this is a technology play, and no investor wants to miss the next Internet. This is the next Internet.
Let's now get back to our top story with Eddie van der Walt, and that's the markets. And within the markets, we fold Bitcoin. Eddie, thank you. So what exactly is going on with El Salvador? I thought they were actually going to support the cryptocurrency, but
right.
it's fallen out of bed.
Right. It was so much fun. Covering cryptocurrencies is never boring. And look, what we saw here was, this was going to be Bitcoin's coming out party in many ways, right? This was the first global central bank country that adopted it as a reserve currency. So it was a big moment for Bitcoin, but it didn't go well, unfortunately. On the one hand, prices fell significantly. People were talking about pumping prices on the day, buying, $30 worth of Bitcoin. That we had this on Reddit and on Twitter. And then the price dropped significantly, as much as 17%. But then at the same time, there was glitches with the wallet. So it wasn't a great success, on the first day of this. Nevertheless, I think there will be some in the Bitcoin community that will be very happy to have seen this.
But it feels like a public disaster.
It feels like a disaster. On the one hand, on the day it feels like it. And today is certainly not a good day. There's going to be a lot of negative headlines. But people are talking about cryptocurrencies. People are saying, look, we have done this. There were people who've made payments at McDonald's in El Salvador. And this has proven not a complete disaster for them. It has still been adopted. And you know what the president did? He went out and bought the dip. Another 150 Bitcoin he bought on the day. Unbelievable.
I mean, there you go, one of the biggest investors now in crypto. Eddie, when you look at what it means for, other, I guess, countries, but also central banks looking at this kind of thing, I mean, does it just go for, does it give water to the bears?
Look, I think it has highlighted a lot of the problems because in order to run a country's currency on it, you need to be able to put through a lot of transactions. And what we have seen historically for Bitcoin is when you see that high throughput of transactions, it becomes difficult. The network cannot cope. It cannot transact pass as many transactions through the system as can a Visa or a MasterCard. So that's one difficulty. Another difficulty is in history we've seen when exchanges get hacked, what happens is the wallet gets hacked, not Bitcoin. And this is something that will be worrying. And we've seen all of these problems potentially highlighted. No indication that El Salvador's wallet was hacked. But I think this will give food for thought. Nevertheless, Western central banks are working on their own digital currencies. So this is something that's still developing.
Eddie, thanks so much. Eddie van der Walt there from our MLive team. Now, coming up, stocks and futures fall as investors assess multiplying risks to the recovery. We'll talk next with Michaela Marcuson, the chief economist at Société Générale. This is Bloomberg.
Can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at what's coming up today. Andrew Bailey, the Bank of England governor, speaks at the UK Parliament's Treasury Select Committee today. Then at 5 p.m. UK time, we also have the latest Russian CPI figures. A little bit later, all eyes on the Fed's beige book. And finally, we get GameStop earnings later in the evening, UK time. So here to talk about everything growth, recovery, and central banks is Societe Generale Chief Economist Michaela Markussen. Michaela, thank you so much for joining us. There is quite a lot going on in terms of what we look at to try and figure out what GDP will be, what inflation will look like. Do you feel like economists are quite binary at the moment? There are the ones that are optimistic and actually the ones that aren't.
Well, I think it's true that when we look at the consensus, we do see quite a divide in views. But I also think that some of the division in views links to the underlying uncertainties that we still have from the pandemic. But let's just step away from some of the pandemic factors and consider what will shape the global economy moving forward. Now, to my mind, it was always to be expected that the reopening of economies would give rise to a fast restart. But beyond this restart, I see a number of frictions that are still there that we're trying to deal with. These frictions are visible in supply chains. They're also visible in companies trying to rehire. We do see a number of skills issues out there. And we also see some frictions in prices, which link to both those factors. And then I think there's a final friction that we need to consider, which is a shift away from the temporary support measures that we saw many governments putting in place towards some more permanent support for recovery, the sort of longer term infrastructure plans that are out there to support this is a longer recovery. And I think all of those frictions mean that the speed of the subsequent recovery is going to be slower. And then I think another point of division. So I think that's the first. Yeah, sorry.
Yeah. But when you talk about these frictions in supply chain and, for example, labor markets, right? I saw, you point to that as well. How can you be so sure that they're not structural changes that will actually, here to stay?
Well, I think we have to be quite humble on some of these issues because, indeed, if we just zoom in on the question of supply chains, I see a transitory dimension to it, so which I think will be resolved. But indeed, I don't think the memories of what happened in supply chains during this crisis are going to go away anytime soon. And then we also have the underlying challenges of addressing climate change. And I think companies will be rethinking the organization of their supply chains, probably giving priority to resilience, but also giving priority to some of these newer challenges with the climate change. On top of that, we're also seeing shifting consumer patterns. Again, part of this may be linked to the crisis and new ways of living. But again, climate change plays in. So I think that some of the changes we are seeing are indeed more structural. And indeed, as we move from one model, one economic model to another, inevitably there are frictions. So when it comes to the frictions, to my mind, some are cyclical. Perhaps if we look at things like used car prices in the US, I think that's a more transitory impact. But some, I think, are also going to prove longer lasting. And then I think there's another Go ahead, sorry.
Yeah, I was going to ask you actually about spending. So it's very critical that businesses get back to spending and investing, and I guess the same for consumers around the world, but especially the American ones. I mean, how's that going so far? We had that very strange U.S. jobs report on Friday. Does it tell you to, surprises that we could get over the next 12 to 18 months?
Well, when we look at the U.S. jobs report, we do see a lot of the volatility coming from the hardest hit sectors. So I think we have to be cognizant that there may still be some transitory factors at work there. And then on top of that, we still have the questions of how the exceptional unemployment benefits may also have influenced individual decisions on the labor market. So I think it's going to be a few months yet before we get clarity. But coming back to your point on consumer spending, I think this is another point of divide for economists. Just how much of those excess savings will consumers ultimately spend? I take the view that some of this is, a good chunk of this is concentrated on higher income households and with lower marginal propensities to consume. So I would be less upbeat on this dimension. And it also links into the question of fiscal multipliers, which I think is another point of divide. Both a question on how quickly that fiscal policy support will be rolled out in terms of infrastructure spending and some of the other support measures in the pipeline, but also in terms of just how much confidence and how quickly that confidence can be built. Now, with all governments, many governments globally trying to run large fiscal stimulus, I think, again, there'll be frictions there.
I mean, we're seeing taxes rise in the UK. This is probably the number one actually debate in all countries that have been through the pandemic, which is all around the world. Do you see the US going down the same route? Do you see, other European countries, and how does that change economic dynamics?
Well, so what we're seeing in the US, and this is already visible in the plans, is that the idea is very much to pay for some of Biden's spending plans through tax increases. So I think this is a thematic that's present. Now, if on paper we can design a very good fiscal program, higher taxes do not necessarily have to entail slower growth, depending on how the spending plans are rolled out. So I would be cautious on concluding upfront that it's a negative, but it's very important that it's managed in a favorable way so that it doesn't become a headwind to economic growth. So to the extent that taxes are helping to create level playing fields, that they're being used to favor climate transitions, digital transitions, helping to raise educational outcomes, I think there can be a favorable argument as well. But again, we need to see, as you say in the UK, the proof will be in the pudding. So we need to see very carefully how these things evolve. But again, my bottom line here is that after a fast restart, I see recovery, but I am at the slower end of the consensus because of these various frictions we've talked about.
Yeah, talk to me a little bit about China. We're kind of running out of time, but what kind of proof in the pudding will we see in China? What are you expecting from authorities? Is it going to be more crackdown, or is it actually going to be a balanced crackdown to make sure that there's also not revolt in the street?
So what we see in China today, to my mind, is really a strong focus on making sure that the Chinese economic model can be sustainable long term. And this theme of very high leverage is one that the Chinese authorities have been trying to address for some time now. And I think as we move ahead, this is really the critical factor to watch, is whether this balancing act towards a more sustainable economic development model can indeed be pursued while ensuring still reasonably good economic growth numbers. So this, to my mind, is really where the critical aspect lies. It's in shifting the growth model towards balancing, and we saw this very much in the 5-year plan, balancing the dual circulation, as it's called, between the domestic growth drivers and still ensuring that the benefits of international capital flows and trade are there for the Chinese economy.
Mikael, thank you so much. Mikael Markussen, their Group Chief Economist at Societe Generale. Now, coming up, Morgan Stanley downgrades its outlook for U.S. equities after months of outperformance. We'll dive into today's market moves next. This is Bloomberg.
seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg. First word news. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Boris Johnson's government will hold a House of Commons vote on its new tax package today. The UK's Prime Minister appeared to see off a Conservative Party rebellion over the tax hike after announcing that pensioners and shareholders would also pay more. The increases are expected to generate £36 billion over the next 3 years to fund the COVID-hit National Health Service and social care for older people. Now, the White House says 3/4 of US adults have now received at least one dose of a COVID-19 vaccine as President Biden prepares to outline a new study to fight the pandemic. Biden will unveil the plan on Thursday, with vaccine hesitancy slowing the country's inoculation efforts and cases hitting a new record last month. Egypt's Minister for International Cooperation has described expectations for the country's growth rate as impressive. Rania Al-Makshat spoke to Bloomberg at the start of the Egypt International Cooperation Forum conference, which is happening in Cairo.
Our growth rate has been one of the positive ones globally. Expectations are quite impressive going forward, and that comes on the back of very important reforms as well as projects across different sectors that have not stopped despite the pandemic.
And Mexico's top court has decriminalized abortion, loosening limits in a region where few countries offer access without restrictions. The Supreme Court unanimously declared that criminalizing early-term abortion is unconstitutional. The ruling sees Mexico follow Argentina, where elective abortion was declared illegal late last year. And that was your First Word News. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. We'll talk a lot more, of course, about these top stories throughout the day. Now let's get straight to your market update with Ritika Gupta. Ritika, how's today's trade shaping up?
Yeah, Francine, it seems to be a down day over here in Europe, and we can see that picture kind of shaping up in the US too. S&P futures down some 0.4%, and the Nasdaq also down. I mean, they've reached a fresh record high yesterday on some of those big mega cap tech names, but not escaping the pain today. Then I had to talk about yields here. We sit at 134 on the 10-year, so yields just a touch lower, but we have had a lot of chatter about why we're seeing higher yields after that disappointing payrolls data. Well, some people pointing the fact that we do have a deluge of supply coming to the market this week. Those Treasury auctions, $120 billion worth, and we do have that 10-year auction kicking off today. And then, of course, we have to talk about Bitcoin, because extending those losses down some 5% today after 17% drop yesterday after El Salvador really fumbling that exposure of a legal tender here for Bitcoin. Let's flip up the board here and let's talk about some of your movers on the day. Let's start off with Sanofi, that moving down 1.7%. They continue on that M&A spree. They're buying Canode Holdings here. This is a company to give them exposure to some immune system drugs. This is its third major acquisition this year, but a lot of analysts saying it's somewhat unexpected. So we see those shares ticking lower. And then let's stick with M&A here, but move it over to Morrison's. Those shares up just 0.5% here. They say that we will now have an auction between their bidders, Fortress and CD&R. They haven't given their final bids yet, so we see those shares, which have rallied over the past few weeks in this frenzy of a takeover, now up some 0.5%. And then also, I've got to look at Ferragamo here, a nice boost to the luxury sector. Those earnings, a big beat here, that net income coming in about 33 million euros. That is more than double what the expectations were. So a nice boost to luxury today, Francis.
Ritika, thank you so much. Ritika Gupta there with some of your main movers. Coming up, we discuss green finance and much more with Chuka Umunna, the former UK Shadow Business Secretary, now head of EMEA ESG at JP Morgan, joins us next. And if you have any questions for him, IB plus TV Go. You can also tweet me at Flacqua. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Selling the fact that legitimacy is Bitcoin's worst enemy, with digital currency sliding as much as 17% after El Salvador makes it legal tender. Mike Novogratz tells Bloomberg he's still a bull. Too good to ignore, Ray Dalio says that opportunities in China and Singapore cannot be neglected as debate rages in the Chinese media over the meaning of common prosperity. And the great green mirage. Bloomberg analysis finds that a quarter of U.S. sustainable credit lines since 2017 contain financial incentives that are largely meaningless. We'll discuss all of that with Chuka Umunna, JP Morgan's head of EMEA ESG. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance, early edition on this Wednesday, the 8th of September. Now, first of all, let's hear from the Bridgewater founder, Ray Dalio. He was speaking at Bloomberg's Radar event in Beijing's regulatory clampdowns and President Xi Jinping's drive for common prosperity. Now, Dalio agrees that the push is necessary for wealth redistribution to happen. This is coming amid a brewing debate among Wall Street investors about the long-term viability of investing in China.
One way or another, we have to move more to an environment of equal opportunity, hopefully to produce greater productivity through equal opportunity, but also to reduce that wealth gap.
You set up a family office here in Singapore. What's top of mind for your family office here? What are the priorities?
Well, first of all, Singapore, the region, China, the whole region is a very, very exciting place. I won't get into all the reasons it's exciting, but it's a well-educated, civil, can-do society that takes care of its family finances well, and it's an exciting part of the world. It's a part of the world that one can't neglect, and not only because of the opportunities it provides, but you lose the excitement if you're not there. And so our objective is to be there both economically and investment-wise. I've been going to Singapore for nearly 30 years in terms of relationships and business things and so on, and I've become very, very attached to it. I love the place. And I've been going to China for nearly as long. And so it's natural that we should be there, and we will. I'm in the investment business. My family invests. And then in addition to that, we do philanthropy. And so we will do what we do there as well as in the States.
You know, Ray, for investors, it's always about return on investment. Trillions of dollars have been spent on major social problems like poverty, clean water, access to education. How do you evaluate impact from your giving?
Yeah, it's there's the saying that it's more difficult to give money away than it is to earn it. And that's right, because one of the challenges is the feedback loop coming from measurement. Dollars in versus dollars out makes profitability, and you live and die by that, and that is all good. When you're dealing with a bottom line that doesn't have such measurement, it becomes much more confusing. Even when I started out with philanthropy, I started to think, where am I going to get the greatest return on investment? And I realized that I was making apples and oranges comparisons. Things like, what does helping nature be better versus reducing a disease versus saving a life? How do you compare those things? You can't.
Well, that was billionaire investor and Bridgewater Associates founder Ray Dalio. Now, Deutsche Bank is calling the end of the honeymoon phase for remote work in a report to clients. The German lender has said that a growing number of workers report feeling isolated from colleagues. Well, it says that staff are also increasingly likely to develop physical problems due to inadequate work-from-home setups. Well, joining us now is Bloomberg's Wall Street reporter, Sonali Bazek, on the very latest on this report. So, Sonali, Deutsche Bank coming out with this report, I mean, it doesn't, really, set fire to the world because a lot of us have been feeling it. What does it mean for the return to work for a lot of the big corporations?
Yeah, it's very interesting because Deutsche Bank itself is one of the firms in the U.S., at least, that has been more flexible than some of its other Wall Street peers. They say this about remote work, but equally you see a lot of companies that have been pushing their work into 2022 for coming back into the office for their employees, big tech companies, and there's still been a really large demand for flexibility from employers, that option to work from the office a couple times a week, but not every day per se, especially as so many families are still dealing with child care issues as their children return back to school in the U.S. So it's a mixed bag, but there is truth to the idea that there is a feeling of isolation. For the younger folks especially, what training do you get? What FaceTime in front of your boss do you get? And what camaraderie do you get in the office as you are going through a very tough time in your career?
Sonali, is it a myth that actually people will change jobs because they don't have enough flexibility of working from home? I know we have stories, some people really care about it, but how difficult is it to get a full picture of what the majority of employees want?
It's not a myth. The reason I know it's not a myth is because from the investment bank executives I speak to regularly, they say that they are dealing with fairly elevated levels of attrition at many of the firms we cover. People just don't want to go back to the way things used to be. So what you have is a series of executives who are saying, okay, what does the future of work mean? How can we give people this flexibility? When, let's face it, Fran, these folks are not now working 5 days a week, many hours, they're working 7 days a week around the clock. So the amount of work that they have has certainly risen while they're facing slimmer desks and worries about what the future looks like in terms of whether their businesses will be competitive or not.
I mean, a lot of people, and we're seeing, you know, a big staff turnaround amongst all of the Wall Street banks. Is it just because, you know, during the first 12 months of the pandemic, people didn't move and so there's pent-up demand, or is it because people are reevaluating their life choice balances?
There's definitely a bit of both. When people had moved from earlier this year, we had heard a lot of, well, COVID made me rethink my life choices. We've been hearing all year from recruiters saying that September, October is going to be a big time for attrition because all of these companies have telegraphed that September and October would be the time that they required people back. So we know that around this time we may see many more departures because people will be looking for employers with a greater sense of flexibility. It's starting to shake out which employers those truly are. You know, you look at the screen right now and there's such a huge divergence. Take Morgan Stanley, which on one hand you have James Gorman who said if you're not back by Labor Day he'd be somewhat disappointed, but we know that Morgan Stanley's offices in Times Square, the big building that everyone remembers, is about 50% filled in any given week.
Sonali, thank you so much for all that great reporting. Sonali Bazak there, our Wall Street reporter. Now, coming up, we discuss green finance and much more with Turko Muna, the former UK Shadow Business Secretary, now head of EMEA ESG at JP Morgan, joins us next. If you have any questions for him, IB plus TV Go. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Credit Suisse has named Rafael Lopez Lorenzo as Chief Compliance Officer, filling the last gap left by the exit of Laura Warner after the Greensill and Archegos scandals. Lopez Lorenzo, who is currently head of the group's internal audit, will take over next month as the bank works to rebuild its management ranks. Christine Graf is appointed as the head of human resources. Ford has snatched the head of Apple's car project. Doug Field joins a 118-year-old car maker as Chief Advanced Technology and Embedded Systems Officer. Field also previously worked as a top engineer at Tesla between 2 stints at Apple and played a major role in launching the Model 3. And El Salvador's experiment using Bitcoin as legal tender had a rocky start as the coin's price crashed on its very first day. The cryptocurrency plunged as much as 17% to its lowest level in a month amid news that the government disconnected its Bitcoin wallet to fix glitches. Later in the day, the president tweeted the problems had been fixed. And that's your Bloomberg Business Flash. Francine.
I mean, I can't believe, I feel like half of my kids' friends actually at 10 years old are now talking about Bitcoin. I don't know if it's in a bubble, but it certainly feels like a bubble.
Imagine that, isn't it, Francine? When I was a child at school, we never had Bitcoin to think about, did we? We just had a little bit of pocket money that we were given to us by our parents. But what a day yesterday, isn't it? The first country to really make this legal tender. Let's see what happens.
I know. I was just skipping on a rope when I was 10 years old. Now half of them want to become hackers and the other 10 want to be fully invested in Bitcoin. Leanne, we'll have to talk a lot more about the habits of the youth. Now, onto our big take, and as corporate America grapples with growing scrutiny of its ESG efforts, firms are increasingly turning to Wall Street to help burnish their credentials. Yet critics say more and more companies are presenting overly polished images of both their commitments and their results. Now, a Bloomberg analysis of sustainability-linked revolving credit lines and term loans arranged in the U.S. since 2018 shows that more than a quarter contain no penalty for falling short of ESG goals. Now, that's only a minuscule discount if targets are met. Well, joining us now for more on this is Bloomberg's Tasneem Broger, who covers sustainable finance. So, Tasneem, I mean, this is actually quite concerning. Bloomberg analyzed some of these loans in the U.S. What were the findings?
Yeah, I mean, the findings show that with these sustainability-linked bonds and sustainability-linked loans, that essentially a lot of the targets that have been set are being set very low. So the issuers don't really face much of a challenge, and that the whole thing is sort of within its own sort of self-perpetuating ecosystem, whereby we're not sort of really facing a sort of a moment of tension when these triggers finally do kick in at some point.
So, Tasneem, what's the difference between a sustainably linked loan and a green bond?
So this is part of the kind of, the proliferation of all these sort of ESG labeled products. Green bonds are where there's a specific use of proceeds, where the issuer is telling the investor that, you're giving me this money, I'm specifically going to put it toward this project, which is climate friendly. With a sustainability linked bond or a sustainability linked loan, there is an element of something sort of environmentally friendly, or it can be socially friendly as well. A lot of these targets are linked to sort of getting enough women in corporate boards and so forth, and that whatever those specific targets are that the company has agreed in its prospectus, that is what then has to be lived up to. If it doesn't, then that releases a trigger that then either sort of sets the borrowing cost higher or lower, depending on the extent to which they meet that target.
Tasneem, thank you so much. Bloomberg's Tasneem Broger there. Remember, you can read today's big take, and I urge everyone to read it. It's a great read and an important one. You can read it on Bloomberg.com or also by typing NI Big Take Go on your Bloomberg terminal. Now let's continue our ESG conversation. Joining us now is the head of EMEA ESG of JP Morgan, Chuka Muna. Now, Chuka joined the U.S. Bank in April after a stint as head of ESG consultancy at PR firm Edelman UK. Now, before then, he was also Member of Parliament for Streatham in South London. He served as a UK Shadow Business Secretary between 2011 and 2015 under former Labour leader Ed Miliband. Well, Chuka joins us as part of JP Morgan's High Yield Conference. Chuka, as always, thank you so much and welcome to Bloomberg TV. Now, over the last 2 to 3 weeks, there hasn't been great news on banks, on finance, and sustainability. And this all started with the whistleblower, actually, at the Deutsche Bank Asset Management company that said it's just not the right way to report things, that things are actually, bloated to make companies look better. What kind of scrutiny are asset managers now looking to see what they have in their books?
Well, thanks for having me on the program this morning. I think in many respects, the reports and the debate around the extent to which ESG investing actually delivers positive outcomes, not only financial returns, is a sign of a maturing market. Of course, it's important that the products do what they say on the tin, which is why I think the European Union deserves quite a lot of credit for seeking to better regulate this space with the coming into force of the Sustainable Finance Disclosure Regulation this year, and there'll be further obligations falling on corporates from 2023 onwards. That is needed to give investors confidence that when they think they are investing in a product which is going to deliver a green outcome, that it matches with the description.
So, Turkey, we're now seeing probes, actually, at various asset managers. What are the wider implications for companies like JP Morgan?
Well, I think, obviously, across our franchise, we have JP Morgan Asset Management on the buy side, and I work in the sell side myself in the investment banking division, leading globally with a colleague in New York, the ESG advisory function. It's very important, and we advise our clients on this, that if you are marketing yourself as ESG and you are purporting to fulfill certain rhetoric, it needs to be matched with data and metrics to illustrate that you are doing what you're doing. Otherwise, you stand accused of greenwashing, and there's more and more scrutiny of this right now. Investors are being much more demanding as well about what it is that they expect from corporates. So, for example, this time last year, it was very much in vogue to have a net zero by 2050 commitment on the part of many corporate issuers. Now, I think investors are demanding a lot more. They don't just want a long-term target like that. They want an intermediate target around 2030. They want a roadmap to show how you're going to get there. They want science-based targets, and they actually want the CEO now, their compensation metrics, to be linked to delivery against that roadmap, instead of a situation where you say got CEOs committing their successors to deliver things when they may not be around. So investors are actually being a lot more demanding here.
Yeah, what does it mean for financial firms? So is there a lot more anxiety, given the probes, on being caught greenwashing than there was just 2 months ago?
I think you have to have robust governance processes and a framework within which you determine whether something is ESG or not, particularly as regulation is running to catch up with the evolution in this market. Obviously there has, ESG investing has been around for some time, but it's really gone mainstream over the last 18 to 24 months. And the regulators are running to catch up with that. And the EU, I think, is in many respects setting the standard. The US administration, you've got the SEC chair, new SEC chair, Gary Gensler, consulting on mandatory ESG disclosures. But make no bones about this, Francie, I think one of the refreshing things coming out of this, hopefully, beginning to come out of the current crisis with COVID-19 is, if you look at the last crisis, the global financial crash, the financial services sector and its different components was seen as very much the problem. I think looking ahead to the ongoing climate catastrophe that needs to be dealt with, I think finance absolutely is seen as part of the solution, because we're not going to be able to reach net zero unless we green our economies, and that's going to require a lot of money. And of course, the public sector is going to have fiscal debt and deficit overhangs from the cost of dealing with COVID. So the market, the private sector is going to be looked to fill to fill the hole.
As long as the financial sector, of course, does what it says on the tin. So I think between, and our wonderful reporter Tasneem reminded me of this, between 2018 and 2020, I think Europe had to take away, ESG labels off $2 trillion in assets. Do you see a similar adjustment that will happen in the US and Asia?
Well, I think watch this space. I wouldn't be surprised if we see things like that happening in other regional centres as the market matures. But I think ultimately there will be more discipline, not least because the regulations require it. And this is really important, because if investors don't have the confidence of the integrity in the market, you're not going to get the capital allocation that is required. And, you know, over the next 30 years, the estimates of the funding need to green our economies is anything between $100 to $150 trillion. You're not going to get investors helping with that unless they've got confidence that the money is going to be deployed in the way that they believe it will be. And that's fundamentally important. And, you know, at JP Morgan, we absolutely intend to play our role. We've committed to financing or facilitating finance to the tune of $2.5 trillion over the next 10 years to help deliver against the UN Sustainable Development Goals and to help with the climate transition, because we see that as an institution, it's fundamentally important to us making that contribution to society, but it's good for our shareholders too, because if you don't look after the environment, your communities, your people, your customers and clients, then you ultimately can't deliver good shareholder value.
Joko, thank you so much. Joko Munadhar, JP Morgan's head of EMEA ESG. Now, coming up, British Prime Minister Boris Johnson announces a new levy for health and social care, breaking an election pledge not to raise taxes. More on that story next. This is Bloomberg.
do you predict the Taliban will do in the coming months and years?
I would say consolidation of their power and gaining international legitimacy and recognition. This is the priority for the Taliban, not supporting transnational jihad, not basically in any activities outside of Afghanistan. If you really watch carefully what the Taliban have done in the past few days, they are engaged in a public relations offensive. They are trying to convince the world. I mean, if you listen carefully to what they're saying, you think that the Taliban are newly born Democrats. They are peacemakers. And the reason why they want to consolidate their power, they want to convince the world that the Taliban have changed.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, here in the UK, the Prime Minister Boris Johnson says that a new tax levy is needed to help fund the country's National Health Service and reform social care, despite breaking a key election pledge in the process. Let's get straight to Dave Merritt from Bloomberg News, who joins us now. So, David, I mean, how problematic, first of all, is it that the Prime Minister will be able to, to basically keep a handle on his Conservative MPs, given Conservatives usually cut taxes and don't raise them?
That's right. Well, earlier this week, there was a lot of noise that Mr. Johnson would be facing a substantial rebellion over this question, a broken manifesto promise, this idea of raising taxes across the board really going against a lot of things that many people in the Tory party believe. But it turns out, actually, it's hard to see this as anything but a bit of a victory. That rebellion isn't really manifesting, and it seems to be fizzling out. He's going to get this through Parliament. And while there are some voices in his party who are still objecting, many people are actually falling into line. And it's because, of course, everyone realizes that there needs to be some more money found from somewhere. And his line yesterday, that whilst not raising taxes was in his manifesto, COVID was not in anybody's manifesto. That seems to have worked. People know that it's been an extraordinary couple of years with extraordinary spending required, and now somebody's got the foot the button. In fact, it is quite a conservative approach to try to mend the public services, and Britain is really out there in front of all the other major economies in the world in starting to rein in the stimulus and increase taxes to pay for some of the extraordinary spending over the pandemic.
David, thanks so much. David Merritt, they're in charge, of course, of our overall coverage at Bloomberg News. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kay Lyons will be in New York. We'll look at market moves. We'll, of course, look at Bitcoin. One of the other things that we need to talk about is the Fed Beige Book. We talk inflation, Bitcoin, cryptocurrency, El Salvador. All of that coming up. This is Bloomberg.
会場に行って観戦するということも難しいお子さんがいるんです。このように冷房の効いた香港の体育館の中で、それこそ大会の最前列で観戦ができる、体験ができる、こういうことをとてもありがたいことだなというふうに思っていますし、この技術に感動しています。予想以上に子どもたちの反応が良かったというのはですね、とても校長として嬉しく感じております。この子どもたち、どれだけオリンピックの心待ちにしていたのかといったことがよくわかるような今日の表情です。
Power of Bloomberg.
Let's get the session started and wrap up the trading week.
News.
Who knew that one earnings story could take the entire market? There's upward pressure on wages.
Analysis.
This is really a slow, ongoing implosion.
Context.
Is there veracity to this granular data of ADP?
It's an ugly report. The power of the Bloomberg terminal. The power of Bloomberg television and radio.
Tesla's the one that we got our eyes on.
Bloomberg has it covered.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
El Salvador, let's face it,
it's on its back. They are grasping at straws with Bitcoin.
We don't really focus on the price, so it's not something we can comment on. It's really that the important piece that we care about is how many developers are getting into the ecosystem, how fast are they building their products.
There's a realization that this is a technology, and no investor wants to miss the next internet. This is the next internet.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Wednesday, September 8th. Our top stories today. Bitcoin's botched debut. The cryptocurrency sinks after El Salvador's troubled rollout of the digital coin as legal tender. Ray Dalio says don't miss out on China. The billionaire founder of Bridgewater Associates says there are too many opportunities here for investors to ignore it. And Deutsche Bank says it's clear that there are too many downsides to working from home. There is quite a lot going on in the markets, Kaylee. A little bit of a down day as once again investors trying to assess what kind of economic risks they can see. And we have some really great stories talking about the debate and divide amongst economists and investors.
Yeah, we all have to figure out what exactly the Delta variant means in terms of economic growth, Francine. And it did seem Delta variant fears did weigh on the Asian session. Asian stocks actually lower for the first day in 9, snapping an 8-day winning streak for the MSCI Asia Pacific Index. Now, there were exceptions to the down day. Japan still higher by about 0.9% when it comes to the Nikkei. You still have a lot of optimism about a new prime minister bringing more fiscal stimulus, but they were down in South Korea, Taiwan, Hong Kong, and in China. And of course, one individual story that has caught everyone's attention is China Evergrande. The world's most indebted property developer got its second downgrade in 2 days, this one from Fitch on a probable default. So its bonds, its dollar bonds are right around record lows. And actually, the equity dropped below its IPO price from 2009 at one point in the session, but did manage to end the day higher by the better part of 4%. In the bond market in both Australia and New Zealand, you are continuing to see selling. The New Zealand 10-year yield sitting at right around 2.02%, which is the highest since April of 2019. And in foreign exchange, the South Korean won is the big underperformer. It's weaker against the dollar by about 0.75%. Now, here in the U.S., you did see cyclicals leading a decline yesterday. Big tech proved a bit more resilient, but futures are lower across the board this morning. We're down about 0.3% on S&P E-minis. You are not seeing what we saw yesterday in the bond market, though. That was selling and a steeper curve. Today, though, a bid coming in. We're down about 2.5 basis points on the 10-year to just shy of 135. Oil is trying to snap a 2-day losing streak. WTI is higher by about 0.3%, trading at $68.54 a barrel. And then, of course, Bitcoin, a really ugly day yesterday. Matt fell as much as 17%. Ended the day about 10% lower, but we're down another 2% or so because El Salvador did not go that smoothly yesterday, Matt.
It would be interesting to know the reason why Bitcoin fell. I don't think anyone's offered an explanation that I can get my head round, but I'll continue to watch for it. It looks like maybe it's the end of the everything rally, at least from this map. Take a look at European stocks, just down across the board. And of course, as you just saw there with Kaylee, we're not looking for a positive open in the U.S. either. And investors are fleeing to the perceived safety of the bond market. So we see bond yields across the board going down, not just the U.S. yields, but also the Bund yields are coming back down again. Gilt yields are coming back down again. French and Italian yields are falling right now. So even though the arrow is green here, we do that for some unknown reason. It's actually down for the yields. The euro and the pound also losing ground against the dollar as the greenback gains. So 118.26 and 137.67 are your levels, Francine. It really looks like a little bit of a turnaround on this Wednesday. It looks like investors are definitely risk off. And the question is why? What's happened?
Yeah, the question is why, what's happened. I was looking actually at some of the notes, so I hear more and more, Matt, talk about valuation, then Morgan Stanley cutting that U.S. stock to underweight and also global equities to equal weight, actually citing some concerns about growth through October. Now, a look at what else we're watching today. And the UK Parliament will vote on the government's new tax package. This is after several previously skeptical members of Parliament welcomed the plan. Then the Bank of England Governor Bailey testifies on financial stability at 11 a.m. New York time. Deutsche Bank's Christian Saving and Santander's Anna Butin speak at the Handelsblatt Banking Summit. The conference runs until September 10th, and GameStop will report its second quarter results after the bell. Then 2 p.m. New York time, the U.S. Federal Reserve releases its beige book, and investors will look for anecdotal information on the U.S. economy. Now, Bitcoin's debut as legal tender is off to a rocky start. The cryptocurrency dropped to the lowest in a month after the rollout in El Salvador. Let's get straight to Justina Lee with the very latest. Justina, so we thought this was the big moment for Bitcoin actually to come out in the open. It's legitimate, it's legal tender, and actually it was really choppy in terms of trading.
Yeah, I mean, that's right. I mean, we often see this kind of pattern with cryptocurrencies, you know, buy the rumors, sell the news. And there also appears to be some glitches with the rollout yesterday. Like the government had to briefly disconnect the official Bitcoin wallet in order to fix those issues. And they do appear to be kind of resolved by now, but it really have kind of like made people quite nervous, you know, all across the crypto community.
Yeah, and we saw other crypto prices fall. I think that was interesting as well, Justina. It's not just about Bitcoin, right? Everything fell, and I just can't see a reason why.
Yeah, I mean, we often see this pattern with cryptocurrencies. You know, the volatility usually comes from Bitcoin, and a lot of the, you know, the altcoins and even the NFTs all have very high correlation, which just shows you how the entire ecosystem is still very sensitive to like the sentiment of Bitcoin and kind of like these series of liquidations that often just kind of like roll across the system.
Absolutely. Bloomberg's Justina Lee, thank you so much. And now we turn to Washington. President Biden's $4 trillion economic agenda hitting more hurdles in Congress. Deepening divisions in the Democratic Party include objections by key Senator Joe Manchin that threaten its chances of passing anytime soon. Emily Wilkins, Bloomberg government reporter, joins us now from Washington. So, Emily, Axios reporting this morning that Manchin will agree to $1.5 trillion at most of that socially oriented spending. That is a $2 trillion goal from what has been proposed. Is it realistic?
So I think at this point, negotiations are still very much going on within the Democratic Party. You're seeing lawmakers begin to really put together these bills and to come out with the exact details of what's in them, and then those are going to be up for debate as well. Look, we knew that Senator Joe Manchin was wary of that $3.5 trillion price tag, and we knew that he was not alone. So sort of from the beginning, we had a sense that this package might wind up being a little bit smaller. The question, of course, is how much smaller? And perhaps the bigger question is which priorities are in or out. I mean, you have to remember, even though Manchin might want a smaller package, things such as child care, such as elder care, such as expanding Medicare to cover dental and vision and hearing, these are things that are popular even in more moderate Democratic districts. And at the end of the day, all Democrats, not just President Biden, not just the progressives, but even moderates, do want to see some sort of package pass, something they can run on in the upcoming 2022 elections.
But you stole the question. I mean, that's, you know, the million-dollar question is actually how much smaller can it be? And the other issue is we're hearing some Democrats could be eyeing taxes on stock buybacks.
Absolutely, and I think we're going to be seeing more details come out in the coming days. I mean, the White House has said that they are in contact with Senator Manchin, with other Democrats. I mean, these are positions that have been staked out for quite some time now among congressional Democrats. The only difference is that now the rubber's finally meeting the road. We're finally seeing some details emerge, and they're on a crunch. It is now September, and if they want to get it done, their deadline, they have a soft deadline of September 27th to really pull this together, and that does not give them much time.
19 days to be exact. Bloomberg's Emily Wilkins of Bloomberg Government, thank you so much. And turning now to Wall Street, Deutsche Bank is calling the end of the honeymoon phase for employees' relationship with remote work, citing in a report to clients that a growing number of workers are feeling isolated from colleagues. Sonali Basak, Bloomberg Wall Street reporter, joins us now for more. So, Sonali, that may be true, but a lot of banks still aren't bringing their full staffs back to the office because of Delta.
Yeah, that's absolutely true. And we also know, even in that Deutsche Bank survey, we know that employees have called for more flexibility and the option to work from home a couple of times a week. So the question is, and many are asking, if Wall Street was able to ink record numbers while working from home, what benefit does it bring them to come back in the office? There's certainly a divergence by age, by function, and by proximity to the office. This idea of commuting is something that is frustrating a lot of employees. Obviously, we've had some natural disasters lately as well that have made it difficult for people to come in more recent times. Though we are seeing some employers, I think of, for example, Schoenfeld, which is a big hedge fund in the U.S., which has created offices in the suburbs, more offices, so that employees can go to a workspace that is easier for them in terms of commute and in terms of lifestyle.
You know, Stanley, honestly, if you're taking your helicopter to one of your Hamptons houses to work 3 or 4 days a week, I think you're going to be fine. Let me ask you about some of the moves that we're seeing. Citi hiring J.P. Morgan's Truesdale and some more tech execs, and then we saw J.P. Morgan is buying Volkswagen's payment system. So banks are really starting to embrace the fintech and make some hires and make some acquisitions on that end.
Yeah, it's interesting that Citigroup hire is less about fintech and more about technology investment banking, which we know every industry now needs technology expertise to transform. Think about Ford and its hire just yesterday. So that's what the Citigroup hire is about. But that point on fintech is absolutely correct. You're seeing the market caps of some of these major fintech firms really start to catch up. Wall Street has taken notice. We have seen the firms, J.P. Morgan, Goldman Sachs, be very friendly to the fintech community, hire a lot of high-level technology talent, but this all comes together at the end, Matt. Lifestyle, pay, opportunity, the prospects of the firm. What will attract the best technology talent at the end of the day in order to make these firms extraordinarily competitive? At a time where, and we don't talk about it nearly enough, these banks are trying to do a wholesale automation of many businesses. You could think fixed income trading, for example, that has been a little behind in the last few years.
All right, Bloomberg, Sonali Basak, thank you so much. And I do want to get back to the markets now and take a look at some stocks moving in pre-market trading here in the U.S. And your big mover to the upside is Cadman, which is a U.S. biotech company. It makes a treatment for transplant, a transplant drug. It is up 75.6% in early hours after Sanofi agreed to buy the company for $1.9 billion. That's about a 79% premium to yesterday's closing price. So that's why you're seeing the outsized move to the upside. One move to the downside, though, to note is Coty Beauty. It is after it announced a secondary pricing of a secondary offering at $8.53 a share. It's trading at $8.64 a share this morning, down by about 7% or so. And one final mover to the downside is WePath, of course, the software company. It reported after the bell last night, and its revenue guidance missed some analyst expectations. Plus, an analyst over at Barclays says its annual recurring revenue may pale in comparison to some of its higher growth peers. So that stock is down about 7.1% before the bell, Francine.
Some of the movers that we're watching out for. Kaylee, thank you. Coming up this hour, we'll talk about treasuries. We'll talk about inflation, of course, economic growth with Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist. We'll talk to him about cutting also the recommendation on U.S. equities to underweight. This is Bloomberg.
somebody said, I want to be the next Reid Hoffman, what would you say is the best training ground to do that?
Well, I'm still young enough that I'm still hoping to be the next Reid Hoffman myself.
One way or another, we have to move more to an environment of equal opportunity, hopefully to produce greater productivity through equal opportunity, but also to reduce that wealth gap. That's opportunity gap and wealth gap thing, and that redistribution is in the swing, and that will happen.
That was Ray Dalio, Bridgewater Associates co-chairman and co-CIO. He spoke with Bloomberg's Haslinda Amin on the opportunities in China. Joining us now is Damian Sassower, Bloomberg Intelligence Chief Emerging Market Credit Strategist. And Damian, he basically said you have to be in China, which runs counter to what we heard from George Soros earlier this week, which says it's a tragedy to be pouring billions into China. Who's right?
Well, I mean, the verdict is still out, Kelly, but for me, I think you can't ignore China. I mean, the economy is, going to be the largest in the next 10, 15 years, if you kind of believe where the forecasts are headed. But for me, it's really about China government bonds. With yields, positive, real yields positive relative to other developed markets like Japan, Europe, and the U.S., I mean, that's just one area where you can clip coupon, you can get carry, you can create a ballast for your portfolio. And I think that's what BlackRock is really referring to. Obviously, there are opportunities on the ground. Obviously, there are opportunities in equities. But for me, I think it's more about the bond market. And as we all know, there's some overhang in the China dollar bond market right now due to Evergrande, which is grabbing a lot of attention.
Well, I'm glad you brought that up because Evergrande got its second downgrade in 2 days. Fitch saying probable default, got to downgrade it. What happens if Evergrande does default?
Well, obviously, it's going to be very bad for the property sector and by default, very bad for the banking sector in China, right? Because, I mean, look, what Evergrande bonds were used for is collateral to basically lend against or borrow against, rather. And so when the CCIC, which is the big rating agency in China, which actually matters more to Evergrande than Fitch and Moody's, maybe not to the dollar bondholders, but to the company itself, $300 billion of liabilities, call it $40 billion due over the next 12 months. A default is going to trigger a lot of pain in the sector. And we're already seeing that in Guangzhou, Agile, Kesa, and a lot of the other property managers in China whose dollar bonds are trading weaker off the back of this.
David, good morning from London. So we saw actually BlackRock going back, opening this fund. I think we had 111,000 investors wanting to get in China. Is a bigger concern that you have financial companies, in joint ventures or trying to go it alone in China, and then the Chinese authorities 2-3 years from now, go back and say, actually, I want to nationalize part of your company?
Francine, transition and volatility is nothing new to emerging market investors, right? I mean, and typically emerging market investors such as myself look to take advantage of these, valuation discounts, these dislocations, these opportunities that are created by regulatory and political risk. And this is no different in my mind. So yes, I do believe that, Ray Dalio and Larry Fink, you can't ignore China. You can't ignore the opportunity, especially when valuations are so rich in developed markets and everywhere else in the world. I mean, there's been a lot of news about S&P forward, EPS trading at all-time highs, what that's doing to forward PE multiples 20 plus. And, if you're looking for a bit of a discount, you're looking to come into the market today, China is obviously one place that a lot of investors are just going to have to look at.
What do you think about the George Soros view? You wrote an op-ed in the Wall Street Journal saying that BlackRock is making a tragic mistake here and on the wrong side of, a life and death decision.
George Soros, look, I mean, I'm a phenomenal investor, broke the Bank of England, but a bit of a firebrand here. I mean, look, I read that op-ed piece in the Wall Street Journal. I think, for me, it's not that BlackRock is recommending that investors blindly plow billions of dollars into China. I think, what's realistic to say is, listen, if you're, again, trying to diversify your portfolio or create a ballast for your portfolio by investing in, other fixed income instruments, well, China offers all of that. And so I'm not at all defending China. I still think there's more pain ahead, Matt, but it's definitely something that you really can't ignore in this environment.
Cannot ignore it. Damian, thank you. Damian Sassower there, Bloomberg Intelligence Chief Emerging Market Credit Strategist. Now we'll have plenty more, of course, on emerging markets, on China shortly. This is Bloomberg.
Are you still committed to the U.S. pickup market? You mentioned how small it is, and I know you do good business at the frontier, but a lot of times Americans want something bigger like the Titan. Is that, do you plan to stay in that market as competitive as it is?
I mean, for us, market is one thing. The second is what customer aspires for from Nissan. And customer in United States aspire for sedans, SUVs, and the pickups. And Titan is a great pickup truck, and we are, of course, focusing on the Titan. But as I said before, that in our whole lineup, our main focus is always been in the sedans and SUVs and the smaller pickup truck.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What's happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, you know, we see the evidence of that strong consumer.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News. And in the UK today, Parliament is expected to vote on Prime Minister Johnson's call for $17 billion in new taxes on workers and companies. Now they will go towards paying for improved social care. Well, Johnson's Conservative Party is traditionally against higher taxes, but the new revenue will, of course, help trim budget deficits bloated by the pandemic. Now, China has moved to complete its purge of Hong Kong's election system. New rules make it all but impossible for opposition lawmakers to return to the city's legislature. Now, in the last 10 months, over 300 elected legislators and district councillors from pro-democracy groups have resigned or been removed from office. BlackRock has raised $1 billion for its first China mutual fund. The world's largest asset manager closed fundraising ahead of its September 10th deadline, short of its goal. That's so it could start investing earlier. Well, billionaire George Soros has called the BlackRock investments a tragic mistake that could hurt clients and U.S. security interests. And what was assumed to be Apple's next big thing is suddenly in doubt. Now, the company's top automotive executive, Doug Field, has left to become Ford's chief advanced technology officer. Now, Apple has been developing a self-driving car. Field is the fourth executive leading the way to step away in the unit's 7-year history. I love this story. And Matt Miller, you're fresh from the auto, of course, the Auto Forum over in Munich. I don't know how close we are to driverless cars, but it's actually amazing that someone is leaving Apple to go to Ford, where, you know, a lot of people say they're actually quite behind in terms of driverless cars.
Well, Ford seems to be doing pretty well in terms of driverless cars. I expect them to have a product out there, well, that could drive itself already, but it won't be legal for maybe a couple of years. Driverless cars are definitely here. The question is, when can you put them into traffic? And that's going to take a little while in terms of regulation. The Doug Field story, I think, is really interesting because he started out at Ford, and then he went to Silicon Valley, to Tesla, and to Apple, and now he's back at Ford. So it's a pretty cool way of Jim Farley, the CEO of Ford, to bring back tech and Silicon Valley people, which, to be honest, Ford and Bill Ford have been working on for quite a long time.
Well, and Matt, this brings me back to the Qualcomm interview you did yesterday morning with the CEO at the auto show in Munich. Nick, and he said car companies now have to be technology companies, and this is kind of case in point. But there's also the question of not just where this leaves Ford, but where this leaves Apple, because it's the Apple car that we've known about for many years now, but we don't hear that much about.
To me, that's the biggest question, because, of course, car companies are now technology companies. They all want to be an iPhone that you drive around in. The question is, does Apple now ever make an iPhone you can drive around in, or are those ambitions dead? Yeah.
So, Matt, is there a natural fit for Apple? So what Apple would do the systems and their Ferraris that you're driving around?
Is there a fit for Apple? I mean, I use Apple in my car, but I think car makers want to get around them and get that revenue for themselves.
All right, we'll talk a lot more about this throughout the day. Coming up next, Andrew Sheets, Morgan Stanley Chief Cross-Asset Strategist. We'll talk about that bold Morgan Stanley call on U.S. and global equities. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Matt, the focus firmly, of course, on economic prospects. And once again, investors are split. Some saying valuations are cheap. The other ones actually saying that valuations at the moment look a little bit high, which is why we're probably seeing a bit of pressure on some of these stocks today.
Yeah, absolutely. I think it depends where you look. Our Michael Msika in London is writing in the Taking Stock column that he thinks valuations are really cheap in energy and commodities. Not just that he thinks that they are, he's actually showing us that they are. Just about half of the forward PEs that you see on the broader stocks 600, and the stocks haven't done nearly as well. So for some reason, energy and commodities just not keeping up with the overall market, Francine.
Yeah, and Kaylee, this is all playing out in the markets today.
It is, Francine. In the European session, you do have the stock 600 lower by more than 1%. Pretty much every single industry group is down, including the ones Matt was just talking about. You have energy, basic resources. A lot of those more cyclical sectors are actually the ones that are underperforming. The biggest underperformer is actually the autos and parts index. But as a whole, the index right now is down 1.05%. And here in the U.S., it was the cyclicals that were under the most pressure yesterday, even though big tech companies were a little bit more resilient. You actually had the NYSE FANG Plus index hitting a record high. But this morning, even NASDAQ 100 futures cannot resist the selling pressure we are seeing, though they are off session lows. We're down about 0.1% at the moment. You are seeing a bid coming into the bond market. The 10-year yield down a little more than 2 basis points. We're sitting just south of 135. And then have to point to Bitcoin as well, also off of session lows, but down another 1.5% today after falling about 10% yesterday. That El Salvador unleashing the cryptocurrency as legal tender turned into a bit of a sell the fact event. Now, with that move lower in Bitcoin, you are seeing some crypto-related equities under pressure in pre-market trading. Marathon Digital, Bit Digital, Riot Blockchain, each down in the ballpark of 2 to 3%, and Coinbase down 2% as well, although part of that also has to do with the SEC issuing a Wells notice over its lend product. So we'll have to keep an eye on that story. But back to the equity market more broadly, Morgan Stanley is cutting its recommendation on U.S. equities to underweight, citing outsized risk to growth. Bloomberg's Ritika Gupta has more. Ritika.
Yeah, Kaylee, Morgan Stanley cutting U.S. equities to underweight and global equities to neutral. Instead, they're saying they prefer Japanese and European equities. And it really comes at a time when there is a lot of concern about lofty or extreme valuations over in the U.S. You can see this by this chart here. The S&P 500, this orange line, and you can see it's trading at a big premium here to global equities, this white line on a year-to-date basis. Now, there's a few reasons here that they're citing for it. One, of course, the surge of the Delta variant, but they also point to this interesting dynamic here where we have high expectations of inflation but low yields at a time we have historically poor seasonality, and I quote there from Andrew Sheets' note. And they're not alone here. They have the likes of Credit Suisse, Citigroup sounding the alarm on U.S. equities. Citigroup saying that any minor correction could be exacerbated, amplified, because of the extent of bullish plays that we have here in the market. And Credit Suisse also concerned about those lofty or extreme valuations, and they're also pointing to increased risks of regulation on the horizon as well. Francine.
Ritika, thank you so much, Ritika Gupta, there with the very latest for Morgan Stanley. So joining us now is Andrew Sheets, Chief Cross Assets analyst at Morgan Stanley. Andrew, making all of the chatter, of course, on the markets jazz. What exactly are you worried about in terms of valuations?
Well, thanks. Good morning, Francine. So I think markets are in a tough place, especially the U.S. market is in a tough place over the next 60 days. I think you have a period where we think the growth data in the U.S. is going to look quite weak in September. A lot of that weakness might actually be a little bit in the rearview mirror, but the weak data will get reported in September at a time when you have heightened risks from the Delta variant, schools reopening, et cetera. At the same time, we think we're in a situation where the Fed's going to sound a little bit more hawkish than the market expects when they meet on September 22nd. We think rates will ultimately move somewhat higher. And so I think the market's in a tough place. If the data does stay somewhat soft, then earnings revisions need to come down. The market's valuations just haven't adjusted like other parts of the market have. Yeah. If the growth data is fine, then yields need to go up, and we think that has an outsized negative impact on the S&P.
Andrew, so how much more cautious did you turn since we started really talking about tapering from the Fed?
Well, this, ironically, I don't think is much about tapering, even though I think that's where a lot of the market focus is. I think tapering may be the issue that's best flagged by the market. I think our concern is specifically around that the Fed will potentially point to a faster pace of rate hikes when they unveil the 2024 dots. at the September 22nd meeting. It's also about this window of weaker seasonality, of heavier supply in both the bond market and the equity markets, which we think can undermine some of the technical position in the market that's been so strong. So I think those are both reasons that we make this change now rather than at another time.
In terms of the central bank here, Andrew, I keep getting the feeling no one doesn't have it together as much as the ECB. Am I off base on that?
No, I think you're very much on base. And I do think that when we think about the global picture, there are really big, serious divergences between policy in the ECB and the Bank of Japan versus what we'll get from the Fed. Inflation in these areas is just very, very different, not just today, but over the last 5 or 10 years. And so there was really, I think, a significant, almost unprecedented case for central bank divergence, for the ECB and the Bank of Japan to sound much more dovish over a much longer period of time. And those are factors that we think both will weaken those currencies versus the dollar, but also in a bigger picture sense, provide some support for those equity markets relative to the US and emerging markets.
Is it going to be easier or more difficult for the ECB to be this dovish after September 26th, after a new German government?
Well, we think that they'll still have a strong case to remain dovish because they've missed their inflation target for so long, and they're moving to this new symmetrical inflation target, which should be even easier to hit or easier to justify staying dovish for longer. So we'll see what a new German government brings. If it does bring more fiscal stimulus, then maybe that would change the calculus a little bit, although I think more stimulus would be seen as probably a good thing for the region's equity market overall. So, bottom line, we still think that optionality is there.
So, Andrew, since you mentioned stimulus, talking about it here in the U.S., there's a major question on how much long-term economic spending we're actually going to get. Joe Manchin doesn't want $3.5 trillion in social spending, maybe more like $1.5 trillion. Plus, you have the tax factor in all of that. What is and is not priced in by this market?
Well, Kaylee, that's a great question because I think this is another kind of binary event that the markets are facing as they head into September and October in a binary way that could be unhelpful. So our base case remains that you do end up getting a quite large fiscal package. Maybe it comes down into the high twos. Maybe that's seen as enough of a compromise to get Senator Manchin and Senator Sinema on board. But it's still a pretty significant level of stimulus by historical standards. At the same time, the way that the legislation is set up is that if you're not able to get the reconciliation package through, then you probably don't get the compromise bipartisan infrastructure framework through, and then you get a big disappointment from our market standpoint. So again, I think something that increases some of these kind of binary events for the market.
Well, talking about that disappointment, I was talking to Peter Cheer of Academy Securities about this yesterday, and he said if the fiscal spending doesn't actually materialize, you could see 10-year yields here in the U.S. drop to 1% way sooner than they would reach 2%. What do you think the trajectory is in terms of the bond market?
Well, we do think yields will head higher. Now, part of that is we don't think the stimulus will fail. We think it will pass. We think ultimately a compromise among the Democrats will be reached. And then also we think that if you look at the pace of rate hikes, and I think this is very important, in September 22nd, the Fed will for the first time unveil where they see their dots for 2024, which will represent a full year of hiking. So it will give us, I think, a very explicit picture of what a full year pace of hiking the Fed has in mind. At the moment, the market is thinking the Fed will approach that very slowly, but the Fed is going to be lifting off well into an economic recovery at a very low unemployment rate. So we think it's that's actually potentially a catalyst to push yields higher as much as the fiscal stimulus is also important.
Andrew, in terms of valuations, you can talk Bitcoin, gold, anything at all. What do you think is the most, mispriced asset out there?
Gosh, that's a good question. So we think real yields are very mispriced. Those are exceptionally low by any historical standard. I think they also still reflect more of a secular stagnation type of market that we had over the prior 10 years than the environment that we're in now. So I think that's probably at a big picture sense the thing that is most extreme and most kind of disconnected from our macro standpoint. It's not as overvalued, but if we believe that real yields are heading higher, which our rate strategists do, if we believe the dollar is also going stronger, which we do, then that should be a negative for gold. And so we have a cautious position on the gold price.
All right, Andrew, thank you so much for the insight. Andrew Sheetzer, Chief Cross Asset Strategist at Morgan Stanley. Now, coming up, Ford goes to Silicon Valley, one of the car makers' new hire. That's coming up next, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
We have a clear roadmap. 2022 will be the last year of a firework of combustion engines only. And then in 23 and 24, we are going to hybridize all our lineup. It's not only about Europe, so we have to be prepared to be compliant worldwide. So it's useless to have, let's say, an exemption and everybody's doing thumbs down. We have to work with what the legislator is telling us.
That was Lamborghini CEO Stefan Winkelmann at the Munich Motor Show talking to me about why it doesn't matter if the Italians push for exemptions at the EU level. They need them either worldwide or not at all. The competition for hybrid cars and electric vehicles really heating up, blurring the lines between the auto industry and the tech industries. That's as Ford hires the head of Apple's car project to compete with Tesla and other EV makers. For more, Bloomberg's Craig Trudell joins us to talk about this. I think it's more of a hopeful thing, Craig. The car makers really want to be tech companies, and yes, they have a lot of chipsets in their product, but it's not yet, we're not yet to the point where we're driving around in iPhones, which is, clearly their end goal, right?
Yeah, absolutely. I think everyone pays a lot of attention to the fact that what Tesla has brought to the industry is electrification. But I think a sort of overlooked aspect of what Elon Musk has done and what the industry has struggled so mightily to sort of catch up to is just the idea that he turned the car into more of an iPhone-like device, and that and not just a big old screen that you could operate, but also a car that had over-the-air software updates and sort of got better as you owned it. I think this is something that the car industry sort of saw for what it was, but has had real trouble replicating it. And Ford's hiring of Doug Field away from Apple really could be a watershed moment. I think is the description that Jim Farley used last night. to describe sort of, what the implications of this could be.
Those are the implications for Ford, Craig, but what about the implications for Apple? What happens to the Apple car now?
It really throws the Apple car project into, a sort of state of disarray. I think, Doug Field was just widely regarded within the industry as a really talented engineer. He did a lot of good things at Tesla and sort of had a falling out with Elon Musk when they were really struggling on the production side with the Model 3, but he's an engineer with a very impressive resume. And did 2 stints with Apple and has other very notable bits of experience in his history. And he also started at Ford almost 30 years ago, so it's kind of a coming home moment for him. And this is a CEO that he's working for, in Jim Farley, who himself has a long arc in terms of his history with Ford. His grandfather actually worked for the company in a factory that built Model Ts.
So, Craig, I mean, that's an amazing backstory. Craig, so what does it mean for Apple's car? Is it going to be delayed? I mean, we don't know much about it, but it's meant to be the next big thing for Apple.
Yeah, I think it's a project that's been shrouded in secrecy, and there were some, there was a lot of speculation, particularly early this year, that things were ramping back up. But I think it was a case of, conversations that were taking place between Apple and some companies, both car makers and major suppliers in the industry. But we're still in a place where we really don't have a lot of sort of hard and fast details as to what exactly Apple's aim is. And Tim Cook has said in the past few months, sort of alluded to the idea that, they may not decide to go forward with a car project. He's alluded to the idea that, they have done a lot of work on various projects and sort of decided not to go forward with them. So, we don't know at this point whether this sort of marks the end for Apple, whether it's a setback that, pushes back their entry into the industry, but it's definitely a big loss.
Yeah, I mean, I just can't see where they go with an Apple car. Do they make a fun little city car? Is it a sexy, luxury GT? There's so many options, and it doesn't seem to make sense to do all of them or only pick one. In terms of companies like Ford or Volkswagen, they can make the entire palette, and they are. Fran keeps asking me about self-driving cars, Craig, and Herbert Diess was telling me a couple days ago he thinks it's just a couple of years until we see robo-taxis going around, cities. When are they going to be on the road?
I think we will start to see sort of limited deployments here in Europe. I think we've seen some of those in the U.S. and I think largely for regulatory reasons we have not seen as much activity here. But my expectation would be that we may see play out in Europe much what we've seen in the U.S., where there will be a hype cycle, a lot of excitement sort of being stoked about self-driving cars coming to streets. But you look at what's happened with Waymo, a company that's widely regarded as being out front here. They really are sort of very contained in terms of what they're doing with their driverless robo-taxis, operating just in a suburb of Phoenix. And, we're talking about years now that they've been working on trying to take the driver out of the human out of the driver's seat. This is really, really difficult. And VW's self-driving partner said at the show that this is a multi-generational project. It's going to take a long time.
Craig, thanks so much for all of the insight. Craig Trudell there, who is in charge of our autos coverage. Now, coming up next, part of our interview with Reid Hoffman, Greylock partner and LinkedIn co-founder. This is Bloomberg.
Neptune was discovered, everyone wanted to do it because it was this clear demonstration that you can use math to discover objects.
Unfortunately, since then, no major planet in our solar system has been found. But thanks to modern telescopes, thousands of smaller objects have been discovered in the past few decades beyond Neptune, called trans-Neptunian objects, or TNOs. And planetary scientists at the California Institute of Technology have noticed some anomalies with these objects. Their hypothesis? A giant theoretical planet beyond Neptune, Planet 9. And thanks to a new telescope, equipped with the largest digital camera ever built, we may be one sky survey away from finally finding it.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, is the boom in the venture capital market leading to a bubble? Well, David Rubenstein sat down with Reid Hoffman, Greylock partner and LinkedIn co-founder, on the latest episode of Peer-to-Peer Conversations.
Well, you're always worried about the markets getting overinflated. Amount of stimulus, everything else is part of making this happen. And so I do think that there is some risk within the general market of this. Now, that being said, technology is accelerating the transformation of all industries. There's what artificial intelligence can do to all industries. There's obviously, that's the leading edge of software. There's things happening with AR and VR. There's things happening with crypto and fintech. And so all of this area, I think, is very much accelerating in the future. And so I think that's part of the reason why the venture industry has been so good, is because technology is important in redefining many key industries.
Now, some people would say that the technology world in the United States is dominated by just a limited number of companies: Google, Facebook, Apple, Netflix, Microsoft. I'm sure you're familiar with all this. Do you think that the United States is dominated by too few technology companies, and something should be done to kind of weaken their power, or do you think it's okay as it is?
Well, what I think that we're heading to is we're going from 5 massive tech companies to 10. I think we're already naturally heading in that direction. You can see it with things like Netflix and Salesforce and all of these other companies, which are continuing to also grow in strength and create a breadth of additional global, very strong technology companies. And as perspective as an investor, when you go around and you ask kind of what all the kind of the venture capitalists, they're like, no, we're having more and more startups, more and more ability to create amazing new tech companies. So, if anything, I think we're already naturally on that trajectory.
Do you think that large Chinese technology companies, Alibaba, Tencent, Baidu, ByteDance, and so forth, can have their technology become very dominant or important in the United States and around the world? And are we in a world now where we're competing with Chinese technology companies for market share outside of the United States and China?
So I think we're already in that world. I think that if you look at kind of things that Alibaba is doing in terms of spreading the Alipay and everything else into South America, into Africa, I think that the notion of the technological platforms of the future are in deep, there's a fast-moving competition between companies in Silicon Valley and companies in China. And I think that's part of which systems will be the systems that the world operates in, is I think in deep competition. And that being said, I think we're already seeing Chinese platform companies beginning to make strong headroads into the U.S. ByteDance and TikTok is an obvious one, but I think you already see it in also like drone manufacturer and DJI. There's a whole bunch that are already getting massive global relevance, and you can see it already.
There you go, the Greylock partner and LinkedIn co-founder Reid Hoffman. Catch the full episode on the David Rubenstein Show peer-to-peer conversations. That's tonight at 9 p.m. in New York. Now look at what else we're watching today. I know you're looking at some of the automobiles, and I'm also looking at job openings data, and then we're looking at the UK, Matt.
Wait, I thought I was looking at the job openings data.
You are. It's the royal.
I'm looking at Jolt. I mean, I'm always looking at automobiles. You're right, actually. I got some work to do on my car today, but I am definitely looking at the jobs data. The Jolt's job openings data come out later, and I think it's some of the most fascinating labor data that we get. So pay attention. That comes out at, well, 4 o'clock my time, so 10 o'clock yours.
Yeah, and then before that, I'm also looking at UK taxes going up. Now, more Bloomberg surveillance coming up ahead. We'll hear from the Egyptian Minister of Foreign Affairs, amongst others. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is...
Hello guys.
Need to catch up.
Okay, order place to buy Bitcoin, and I'm looking to buy at 45,911.
From businesses most influential and instrumental.
45,000.
The new framework.
We need to invest
11.
Our systems.
The price.
Wall Street Week premieres Friday.
Replays
Replays all weekend on
later.
television and radio.
There is wide disagreement on whether we've seen the worst of the Delta variant of the upsurge in cases.
Okay, stay safe.
Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What it's making me really nervous
some sort of calamity within the U.S. The idea here is people are so bullishly positioned, and yet we are getting this slowdown in growth. At some point, there has to be a reckoning.
Talking about Morgan Stanley, of course, this morning. Katie Lodge, you caught up with Andrew Sheets. What did he say?
Well, he cut U.S. equities to underweight, John, and basically there are a number of risk factors throughout the next 60 days or so that he sees. On the one hand, you have the economic growth factor, of course, due to the Delta variant, but he also talked about policy risk and then as well, legislative risk. What's happening down in Capitol Hill or what isn't happening, the question over what price tag we are going to see on long-term economic spending is a risk that Morgan Stanley is citing here, especially with valuations where they are. They say now is not the time to be heavily allocated to the U.S.
Katie, doing my best to tee up Lisa here this morning, early in the program. The next 2 months carry an outside risk to growth. That's the quote from Andrew Sheets, Lisa.
Yeah, I feel like I should start growling. The bear's making some noise.
Something
I was
like
like,
that.
wow,
Make it
honestly,
exciting.
you really want me to
We're
get
down
really
a whole
worked up.
5 points on the S&P. Let's go.
Come on. All right, you want me to get worked up about a bearish downtilt? Honestly, I don't know what will trigger it. If you want to be honest, I don't know that the market really reflects the economy. What economic outlook is actually going to send stocks down? Actually, you could see some of the big tech stocks do even better if you get a more negative downdraft, a more significant slowdown. To me, the question really is around taxes, corporate taxes, and whether there actually are some that are passed that are higher than people expect, as well as an unexpected threat. And I do think that Citi is interesting by saying that any minor correction may be amplified due to the bullish positions that are out there. And that, I think, is the key point, the fragility.
You're so bearish all the time. It's too much. We're down 5 on the S&P. Let's work through it. I'm joking.
I know,
Lisa.
you're trying.
We're down
You're
a
really
tenth of
trying to tweak
1% on the S&P. We're just a little bit softer here. Yields come in a couple of basis points. We've been selling off on treasuries for the last couple of days. Yields higher, curve steeper. Not this morning. Down 2 basis points to 135.45. And the FX market, euro negative 0.2%. Euro dollar, Lisa, 118.14 going into the ECB decision tomorrow.
Yeah, and I will say the reason why I'm not just full throttle bearish is because I've been too distracted trying to figure out some of the mysteries in the labor market. And so I've been too concerned with that than trying to understand market moves that frankly have been really muted and not very interesting for the past couple of weeks. And here I think will be the most interesting data point of the day and possibly, frankly, of the week. At 10 a.m. we get the JOLTS job openings figures for the month of July. The expectation is for it to remain around a record 10 million job openings. And this goes to the question, the angst in the labor market. Why are these positions not getting filled? You've got a participation rate that still is well below where it was pre-pandemic. You have a lot of people still out of work. The unemployment rate is still much higher than it was ahead of the pandemic. And yet here we are, all these companies trying to hire and not being able to. John, you were talking yesterday about September. This was supposed to be the key month where everybody went back to school, everybody went back to the office. That has been delayed. When does this start to matter? When do these jobs start disappearing rather than getting filled at all? At 1 p.m., just to continue the auctions that you were talking about yesterday, John, the $120 billion of debt being sold this week from the United States. There will be $38 billion of 10-year notes sold, and this does come after a slight rally today, 134 on the 10-year, now ticking up to 135. Again, to me, the question is how much demand is there, especially with the Fed's tapering still on the table, even though perhaps a bit delayed. If you look at the real yields, this is what I'm watching. Negative real yields, still steeply negative, about 1%. Higher than it was before, but still, nonetheless, people actually basically giving up money for the privilege of going into U.S. Treasuries. How much is this determined by overseas buying, and how much will the ECB's potential taper, which we might hear about tomorrow, put a damper on this potential demand? And at 1:10 p.m., I know that you're going to be talking a little bit about what's going on down in the Dallas Fed with Robert Kaplan, but 1:10 p.m., I'm very curious to hear what New York Fed's John Williams is going to say at an economic forum, and really the reason why is because he is one of the top 3 at the Federal Reserve. What will he signal when it comes to tapering the Fed's balance sheet, which now is a record $8.3 trillion, Sean?
And we'll find out more about the size of that balance sheet tomorrow. What time, Lisa?
4:30 p.m.
4:30 p.m.
Yes.
I know you sit there logged on the Bloomberg
Absolutely.
working it out. Put this one in your diary. 6 p.m. Eastern Time.
Yes.
Dallas Fed President Robert Kaplan holding a virtual town hall. Now, Katie Lines, this will most likely be the most watched virtual town hall of Fed President Robert Kaplan in quite a while, for good reason too.
Yeah, I think it may be colored a bit by the reports we got out overnight about his stock trading, John, and the amount of money that he has made over the last year when we got those financial disclosures from Federal Reserve officials. So I bet everybody will be watching Kaplan. But also, I wanted to point to what we heard from Jim Bullard in a Financial Times interview. Forget about the weak jobs report on Friday. He's still saying the Fed should push ahead and taper in the near term, John.
Lisa, what do you make of that? The Wall Street Journal, here's the headline. Dallas Fed's Robert Kaplan, active buyer and seller of stocks last year.
Honestly, what I made of this was that it was vetted by compliance. It was vetted by the lawyers. If anyone wants to point fingers, it's at Fed policy, not necessarily at Robert Kaplan. And I think that this is important because it really goes to this existential angst. All of these people calling to audit the Fed. It's a fringe movement when it comes to the financial world. However, there is skepticism around Fed officials that have more power than ever over markets, John. And I think that that's what it comes down to.
And certainly not a situation unique to him over the last few years, that's for sure. We'll talk about that a little bit more a little bit later. Let's bring in Nick Benenbrook, Wells Fargo International economist. Nick, forgive me, I'm going to start with Morgan Stanley this morning. A quote from them. This was Ellen Zettner. Delta peaked in late August and makes a strong case for a pickup in jobs this month. The argument we have made that August marks the bottom in activity has also been strengthened. That's Ellen Zettner and Morgan Stanley. Nick, do you agree?
No, probably not. I mean, I think it's too early to sound the all clear. And certainly in the United States, Delta cases are still elevated. So when we look through until the fourth quarter of the year, even though various governments, not only in the US but elsewhere, have not put widespread restrictions in place yet, what we're also seeing is just some uncertainty and consumer confidence has actually fallen in quite a few places. So it's not necessarily basically related directly to the health scare and people perhaps not going out and doing things as they were, but just that feeling unsettled, I think, is going to be a drag on growth or a weight on growth through until the end of the year.
Perhaps it's not the Delta variant, but perhaps it is the fiscal roll-off, the idea that the checks are sort of starting to stop, that the enhanced unemployment benefits dried up this week. All of that goes into a potentially weaker consumer spending picture that has been the driver of the recovery. How much are you tracking that? How much do you give credence to that argument?
I think there's something behind that. I don't think it's dire in any way, shape or form. We certainly look at household disposable income, and it was down fairly sharply in the second quarter in the case of the United States. However, when you look at, again, some other countries, Eurozone and Canada, disposable incomes are on more of an upwards trajectory. So sure, we are definitely seeing retail sales are volatile and soft overall, but when we look at consumer finances in general, there's still enough there to say that there's still potential for the consumer to spend over time.
How do you think the Fed is looking at the health of the consumer and of the labor market? As I just mentioned, you had Jim Bullard telling the FT that they should proceed ahead with tapering because, the weak jobs report, all things considered, wasn't actually that weak relative to history. What do you think?
Yeah, I think that's an ongoing debate. The Federal Reserve, during this cycle and perhaps typically moves in a very slow, sure and steady fashion. And you can definitely see that transition from Fed Chair Powell, for example, now definitely talking about tapering. And so, we don't think they'll pay attention to some of this soft data, but we think that debate and discussion is ongoing. And we believe the Federal Reserve is gradually moving to a formal taper announcement. We think that's probably going to happen by December and that the tapering will start next year. And sure, yes, there's some downside risk to the economy, but policy is very accommodative in the United States relative to what we're seeing in terms of growth and inflation. So probably still going to see a shift there in the not too distant future.
Hey, Nick, one man who has been talking about tapering for a long time now is Dallas Fed President Robert Kaplan. What do you make of the controversy in a bit of hot water in a court of public opinion? Your take on that this morning?
Yeah, not really my area of expertise or anything. That,
Well, do you think it undermines the communication from the Fed, Nick? That's why I ask.
I would sort of agree with Lisa in terms of it was in line with the policies and vetted by the compliance and legal team. So I think that's significant. But I'm sure it's going to be looked at, and just from a policy point of view in terms of the various Fed policymakers, what should be the rules regarding their trading. And I'm sure, as you mentioned as well, it has been picked up probably by the general public in terms of just the optics of it. But again, not really my area of expertise to comment on.
Lisa, helping you stay close to compliance as well. Nick, thank you. Nick Benenbrook of Wells Fargo, international economist. Lisa, not many people are going to want to touch this.
No.
The communication from the Federal Reserve surely with a court of public opinion will be undermined by things like this.
Especially because their policies have had such a dramatic effect on markets. And albeit that assertion that I just made is controversial. Some people say it's less of an effect than others. However, nonetheless, the Fed's policies certainly propped up markets when they made their bold moves. And frankly, given their hesitance to taper, even though there is some pretty strong inflation data, also supportive of markets. If they're in markets, what does that mean, John? I mean, basically, they're betting on something that they've got control over affecting.
Yeah, and this is not just Fed officials either.
Congress.
It's individuals in Congress too, Lisa, which you know over the last couple of years has become a bigger issue.
Yeah, and frankly, no one's cracking down on it because who's going to do it?
Not yet, at least. Exactly. And isn't that the problem? I think they call that regulatory capture of some sort. Anyway, equity futures down 5. I've got to stay out of trouble too,
Here's
apparently.
the soapbox.
We're negative a little more than 1/10%. Yields in a couple of basis points to 135.29 on 10s. In the bond market, in the FX market, euro weaker going into the ECB tomorrow. Euro dollar 118.13. We're negative 0.2%. On radio, on TV. For our audience worldwide, this Wednesday morning, good morning to you all. This is Bloomberg.
With the first word news, I'm Rishka Gupta. In the UK today, Parliament is expected to vote on Prime Minister Boris Johnson's call for $17 billion in new taxes on workers and companies. They will go towards paying for improved social care. Johnson's Conservative Party is traditionally against higher taxes, but the new revenue will help trim budget deficits bloated by the pandemic. President Biden warns that New York and New Jersey are signs of worsening climate change. The president toured the region days after remnants of Hurricane Ida pummeled it with high winds and torrential rains. He said Congress passing his $550 billion public works bill would help build more resilient communities. In Mexico, a historic ruling from the Supreme Court had declared that criminalizing early-term abortion is unconstitutional. That loosens limits on the procedure in a region where few countries offer access without restriction. In Brazil, President Jair Bolsonaro rallied thousands of supporters in demonstrations designed to shore up his base. At the same time, the marches likely turned off moderates who were responsible for him winning the election. Bolsonaro's approval rating has plunged as he heads into next year's election campaign. What was assumed to be Apple's next big thing is suddenly in doubt. The company's top automotive executive, Doug Field, has left to become Ford's chief advanced technology officer. Apple has been developing a self-driving car. Field is the fourth executive leading the effort to step away in the unit's 7-year history. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Welcome to El Zonte, known as Bitcoin Beach. This little surf town on the coast of El Salvador is one of the first to go full crypto. Yep, you heard that right. Everything from groceries to coffee to salaries and community projects can be paid for using Bitcoin.
It's actually been crazy how fast it has caught on and how useful Bitcoin's been for, everyday people.
Just to buy something as simple as a cup of coffee can be done quickly, painlessly.